Welcome to the macro report. We got some good news today. It is earnings season. We are going to enter earnings season despite us having tomorrow. We start CPI. Oh, no, get out of here. Okay, sorry. We have CPI tomorrow. So we're going to have CPI tomorrow, but earnings season, even more importantly, following that CPI is going to be earnings season. And so far, we're going to go over some of these reports from FactSet, who is a really good really good resource for data when it comes to earnings because there's so much information going around. So we're going to take a look at that. And what I want to warn here is we're looking at the data, and it is, it is a little conflicting whether we're in recession, whether we're starting to expand. I think that we're expanding, but earnings season's really going to kick off the difference here. We're going to see that, and we are getting some signals that, well, we got from the Atlanta GDP yesterday. So we're kind of zoomed in here. I want you guys to check this out. This is Atlanta GDP, GDP now. And if you can't see it on TikTok, then check us out over here. We are on YouTube. Okay, let me see. All right, so this is the GDP now model estimate for real GDP growth, seasonally adjusted. So basically, they adjusted GDP up to 2.3%. From 2.1%. If you remember, about a week and a half ago, maybe it was last week. It wasn't last week. It was 2 weeks ago. We did get GDP quarter over quarter, annualized, and it was forecasted to be at 1.4%. And now we are at, we actually came in at 2%, right? But this time, GDP now is now the Atlanta Fed, right? Pretty much the Atlanta Fed or the Atlanta GDP now model. I don't even know who these guys are, to be honest with you. I'd have to look a little deeper into it. Either way, they're revising up. We're starting to get revisions up for GDP, right? That's one. Number two, and I think even more importantly, actually, I wrote a post about this. So I'm going to actually refer to my blog post here over at mindgrowth.io. And we basically got a revision up. We're going to hit the markets, but first let's take a look at this, okay? So I have the GDP now forecast up. Let me make this a little bigger. There we go. All right. So yeah, we got GDP up 2.3%. That's starting to go up because consumers are spending. Earnings season estimates are starting to bottom. This is important, and I'll write this in the macro report, so you guys are going to see this later. But basically, we're headed into earnings season. What we're seeing here is that negative earnings guidance, right? That is basically pre-announced. So this is pre-announced, right? It's more of a sentiment, it's more of a survey, but it's still some information, right? It's information that we're getting here. And what we're seeing is here in the red, these have been negative pre-announcements, right? Negative EPS announcements for S&P 500. And they've been going up since Q1. Now they're starting to drop, and we're expected to see that trend fall, right? Or at least the trend is starting to change. So we look over here on the right, negative EPS guidance is starting to decrease while positive EPS guidance is starting to increase. What does that mean? I think it signals the bottom of earnings. And just to get like a hard stop on this, right? To sum it all up, and I'll go over this later or probably on Saturday on the macro report, dive a little deeper into it. Q2 has the highest number of S&P 500 companies issuing positive EPS guidance. So the highest number since Q3 of 2021, right? Since Q3 of 2021. So that kind of signals that, hey, we might be, Mike Wilson from Morgan Stanley, maybe he's wrong. We are guiding up now, right? We're guiding up in earnings, or at least better than feared. And here's what it looks like. Obviously, the tech sector, there's still a lot of negative earnings. Don't get me wrong, but for the most part, it is starting to shift a little bit. And I think it's the survival of the fittest, right? You're going to see some companies that really get damaged. They're going to be damaged because it's still a tough environment with inflation still pretty much elevated in some areas, with the economy slowing in manufacturing and goods. And software and tech are set to outperform, and some consumer discretionary stocks, yeah, here and there. Either way, there's a lot of recessionary slash expansionary. Dang, Coinbase is moving, by the way. Got it in my eye over there. Stuff going on here. So positive EPS pre-announcements versus negative EPS pre-announcements. So we'll look out for that. I think we're going to get some volatility coming up because you're going to see some really bad reports, maybe from the financial sector, right? Banking. We'll see with banking. Banking's on Friday, right? I think we start Friday for banking. So financials, we will get that. but I really want to see how industrials and technology come out because they are set to do a lot better. All right, so let's jump into the markets really quick, see what we're dealing with here, or at least the macro. We're gonna dive into the macro. Let's take a look at that. Let me know how this music is if you're in the chat. I want to see if it's too loud. Let me know if you could still hear me. All right, so let's start here with, let's see, let me make sure that we're still okay. Yeah, it is live. Good. Make sure it's working here. Okay. All right. So no, we're not looking at Ethereum yet. What I want to look at is the dollar. The dollar is still falling. Okay, and I talked about this. We talk about this every day, right? We're checking out these different trends, and what we're seeing is the dollar still making new lows. It is at the risk. Well, it's not really the market risk, but it is near that support zone. This is the wedge, the wedge pattern, and I think it pretty much is a bearish wedge because it's coming from a high. It's making lower highs, right? Making lower highs coming from above or selling off, and then now starting to wedge. So hey, if this breaks down, and I think it could break down during earnings season, right? You can hear me good. So once we get earnings better than feared, or at least the signal that earnings are starting to bottom, right? Everybody wants great earnings to actually get long. Hey, stocks are going to start to bottom out before earnings actually start to revise up. They're going to bottom out when they predict, or when you see the bottoming of earnings, because guidance is very important, right? What are the guidance going forward? And I think that will kick off the dollar along with inflation better than feared. To the downside, the dollar to the downside. So if we do get that, here goes wave 2 FOMO. I've been saying it for 2 weeks now. Wave 2 FOMO. Are you an analyst or do you also trade? Mind. Both. I do both. It just I don't do like consistent day trading because I don't think it's always the best risk reward. I am swing trading Tesla and some other stuff right now. So yeah, I do trade too. Also asset printer. I thought we talked about that. I guess not. Anyways, yeah, so 10-year yields, or when the dollar falls, for sure. 10-year yields coming down a little bit, starting to ease, positive, right? 2-year yields coming back down. Maybe they peaked out. They could have peaked out, especially with the inflation coming in. I expect better than feared. I think that is going to roll over. I think the yields have peaked, and I see a lot of people, smart people saying, hey, yields are going to go higher for longer, and basically keep trending higher on a secular basis. But that can't be, because that would mean the cost of capital, or the interest for the federal government, they couldn't afford that. They can't afford to pay that high of interest over time, because the debt is much higher than it was 50 years ago when interest rates were near this high. Or 7 years ago. I think it was like 7 years ago, given the 10-year yield. Anyways, yeah, that can't happen, bro. They're going to have to pull it out of GDP. We're going to have a slowing economy. It's not going to happen. They're going to keep investing in tech and a way to produce more productivity. Anyways, here's the threat. Here's our biggest threat here. Oil, right? Oil prices testing that 74 level. And what this really means is as long as if oil gets above 75, okay, if oil gets above 75 here, right, this will reflect in August's CPI. And if it's moving higher in August, that means inflation is going to get a little bump to the upside, and we're going to stall. So the inflation won't keep collapsing. I think it does collapse this month, tomorrow, as a matter of fact. We have tomorrow. What are your estimates? 3%? Estimates, I think, are around 3.5%. ZM is starting to wedge right now. Coinbase breaking out. And that's going to put us higher in August. So we'll see if it gets rejected here at 74, 75. We still have some room on the downside for oil, but that's always a risk, right? The VIX, what is the VIX doing? Nothing. The VIX is still trending lower, okay? We're just looking at the macro factors, and now we know that the actual Federal Reserve takes a look at triple B spreads, right? This is credit risk, just to make it simple for you guys. Oh, just play. This is credit risk here, right? Triple B spreads. Keep this in mind. Credit risk is falling. The risks of, you hear credit, I know people, oh my God, credit risk in the market. Well, the market is not showing any credit risk. Triple B spreads are starting to fall. So there is support at the corporate debt level, basically. Okay. Credit risk, not at risk yet. Move index, right? Bond volatility, that is still kind of elevated, right? And if this remains elevated, what we're basically seeing here is the Treasury, and I think this isn't going to last because the U.S. Treasury won't let this last. is that there's not a whole lot of liquidity possibly in the bond market. It could be and that the bond market is the debt market. It is the underlying collateral. Just keep it this way. It is the underlying collateral for the lending fiat system. It is the underlying collateral for lending in general. So you can't let that get too volatile, or else your rates go up and then growth falls apart and blah blah blah. And you got all the so we need that to go down, right? We're still waiting on that. Either way, I think we're looking pretty good. So let's flip over to, and also what are commodities doing? Look at copper. Copper going nowhere, no inflation. Oops, sorry, I didn't mean to zoom in there. Nat gas, another energy, still at the lows. Nat gas still down, 60, 70%. Gold, well, gold's not really that much of a commodity. Gold's pulling back. Gold looks like it wants to grind higher, but I'm not a believer in gold. Yeah, it might go higher when they print, but for now, I don't think so. And then we flip over to, I know the yield curve is still inverting, but I have a theory on that. I heard a couple guys talking about the yield curve. The yield curve inversion basically is predicting, and here it is right here. The yield curve inversion, except for this is on the log scale. Let's get that regular because it doesn't make sense on the log. This inversion is basically predicting a credit crunch. That's what it does. Oh my God, credit's going to be, well, we already had the credit crunch in the banking crisis, right, in March, and it was a non-event because the Fed stepped in, BTFP, by the Fed pivot. So it's kind of a false signal in my view. It doesn't mean it's completely false, but people are calling for a bigger credit contraction. I don't think we get a bigger credit contraction because the Fed will step in, right? Maybe so. Maybe it does happen. Maybe the Fed wants to keep hiking in order to crash the system so that they can start printing on the downside. That's definitely a viable option or scenario that could happen right now. So I'm not discounting that, but as far as I see, the economy is way too strong, and I just don't see that happening as long as we get inflation down. All right, asset printer, cool. No, we talked about crypto and how it's the worst asset on earth. 100% crypto. Don't buy crypto. Worst asset on earth. Just kidding. Yeah, not for sure. Yeah, I do trade asset printing. I always get mixed up because everybody has different names, but yeah, I do trading. This week I'm keeping my hands off of trading because I want to do a little more reporting on what we're seeing, and also I like to wait for after the news. I like to wait, for after the Fed speaks and inflation, because I get a pretty good base gauge on, okay, this is what the market is trying to price in instead of getting surprised midday. I do like to swing trade. And so, and plus I'm watching Tesla and I don't see a great setup yet. Waiting for that setup for Tesla. Earnings are coming up. There's a lot of noise. I kind of want to wait. I want to pick my spots. I'm not a, super day trader. Or else, day trading is tough to do commentary and day trading at the same time. So I just want to bring some content to the space, right? Now look at S&P 500, right? If you guys are looking at S&P 500, here's what we got. S&P 500 still holding up. We're still holding up after all that news. So we're looking like we're consolidating sideways. Obviously inflation is tomorrow, and I think the report could get us back to the highs and possibly ending. We still got PPI on Thursday too, so it's not over. It's not like we just get inflation. We get PPI inflation the next day, and then Friday we get earnings. So by the end of Friday we should see which way the trend wants to go. And what are we in the mid? We're in mid-July, so we have room to figure that out. We have room there. NDX, we're still at the top of the trend. We've been watching this for a while. Okay, now we did kind of go through the GDP now. S&P earnings guidance up, so keep that. I think that's a big deal. That is a big deal. S&P earnings guidance is going up, right? So that's a big signal there. Now let's go ahead and jump into the market and actually see what the S&P is doing. Let's see how these indexes are trading. Go to the trading station. All right, here we go. You can see it on the left-hand side. I got everything up. So down here, we got the Qs. Now, what I see, definitely SPY dumping, David. SPY dumping definitely is hard to day trade and comment at the same time. Yeah, it's hard to concentrate. So I tried it and I made too many. It feels really off. So I'll figure it out. Maybe I do. Maybe I'll do a trading session. But for the most part, I want to see a really good setup. And I do see them sometimes. But, you got to pick your spots. So I want to wait for things to calm down. or wait till there's a little more clarity. Whenever the Fed didn't speak for like a week, that was a good trading expo. That's when I saw a lot of good setups because the Fed was not speaking and it was just purely technicals. It was the blackout period. So I like to trade during blackout periods. It makes a lot more sense for me. Purely technicals, and the market just moved higher the whole time. It was trending up. All right. So on the left hand side, yes, I got, who is this, Tesla here? Oh man, yeah, this is a crazy chart. Right side we got S&P 500. Let me kind of flatten this out here. All right, we are, S&P did fall, but look, advanced decline is still climbing. Okay, the Dow Jones kind of weak, started off kind of strong. I think I saw IWM very strong this morning. Was that IWM this morning? Yeah, IWM had a little bit of strength this morning. Looks like it's starting to slow down, but it's at 189, right? IWM. So small caps are pretty strong. Small caps are definitely, look at this move by small caps from what day was this? Thursday? This was from last week. We're up 4.6. Market breadth is here. Market breadth is here. Earnings revisions, probably for the best companies, are going up. And, you know, small caps are gaining some leverage there. Oh, Mary Daly, what is she talking about? Hold on, I want to hear this real quick. We heard it yesterday. I don't think there's anything new. I just want to see if there's something new that they're talking about there on the rate path. Treasury yields mostly lower. Yeah, treasury yields are coming down. This is a good setup. I think we're seeing a very bullish setup. I always say that, but I think the bull market is here. And excuse me, I think that's what we're seeing. Okay, IWM starting to push up. QQQ possibly breaking the downtrend. See if we can get above VWAP. Dow still kind of lagging, right? Advanced declines moving up, so there is market breadth. All right, IWM new high of day. I'm just keeping track of everything. I'm trying to keep track of everything. I don't think a lot of people do fundamentals, right? S&P, fundamental analysis, technical analysis, macroeconomics, and breaking news. Fed speak. So I'm trying to juggle all that. If you think it's if it's valuable to you, like, subscribe, follow me on, well, I can't say that on TikTok anymore. So hey, I'm on YouTube for the charts. All right. What up, Slime Z? Good morning. Shout out to you guys. Appreciate you guys on the channel. Trying to get those subscribers up, get some more reach out here. All right. So what do we have here? Thank you. Appreciate it. Yeah, I had a sneeze. All this dust over here. These guys lawn mowing. Day trading doesn't seem like a sustainable business. It's really not. You got to be really good at it, and the market changes a lot. A lot of people don't talk about that, but the market does change a lot, and you have to adapt to the market. So you got to be really good at day trading. Most day traders lose. They lose a lot. They lose more than they win, but it's tough. It's not easy. It's way better to invest. Everybody can invest, right? Bigger audience there. Day trading is tough. Like I said, if day trading isn't a sustainable business and it's not creating real value, what's the point? People still like to day trade, and it takes time to get better. So I still think there's value. I like it. It's fun. I think it's fun to day trade if you're in the zone, if you really see your setups. So it can be fun, and if you learn how to do it, day trade or swing trade, it can bring a lot of value to your life. You develop a new skill. But I think it really does take a lot more work than people think. The markets do change a lot. Swing trading is a lot easier. You know, you set a position for a while, and you sit back and you wait, and you take your hands off the wheel. You don't have to be on every single day staring at the screen. You just have to check in with your positioning. So I think swing trading is a little easier for other people. By the way, Palantir breaking out. Here goes Palantir. I don't know if there's any good news on it. Coin also looking pretty good here. I'm going to throw up a coin on the left-hand side. Right, coin is moving. And let's go to my day trading chart. Man, coin is vertical. Must have some news here. Yeah, it's definitely not for everybody, right? Not everything is for everybody. But neither is like fundamental analysis, and neither is technical analysis. So everybody has, the dollar index hovering near its lowest level. See, yeah, that's what we talked about. And I think it's going to roll over. It looks like it wants to roll over once we get these new reports. There's not really a whole lot of risks in the market. A lot of them are disappearing. Yeah, you're welcome, Black Diamond. Is it sustainable for many people? It is. I swing, need more knowledge today. Yes, day trading is really execute. Day trading is really like a high performance sport, right? To be consistent, you do have to have a good schedule, good eating schedule. You have to be consistent. You got to keep learning. You got to be quick. You got to, and you have to have a lot of resources because, if you can't, there's so many things happening at once. Do you have a lot of screens? Do you know how to pick stocks? There's a lot to it. Swing trading, a lot more simpler. So, hey, shout out to you if you like to day trade, if you like to swing trade, but you got to find your niche, right? Not everybody does it. Even pros, some of them just swing. Some of them use day trading skills to scale in. I like to use day trading skills to scale into a bigger swing trade and to exit. But to consistently day trade, hey, maybe it's tough for a lot of people. All right, so anyways, you see Coinbase setting up here, right? This is the 5-minute chart, but if we go to the 3-minute, this is my setup right here. This is my type of setup. I'm just not day trading right now. I'm just not doing it. I see better opportunities in swing trading. Plus, you don't have to. I can put more size in a day swing trade. I can add more size because it's a longer term versus this, man. Anyways, you got this wedge here forming, right? This wedge. Now, it's not the best wedge pattern. I like Tesla's wedges. Those are probably the best. But you do have a wedge pattern there right into VWAP. And then the breakout probably looks better on the 1-minute. Starting to move up again. What's going on with Coinbase? What is the news on Coinbase? Citadel knows more than you do, but is there a profitable trade on Unity and Carvana? Well, there's nothing here. Okay. Maybe the shorts are getting squeezed here on Coinbase. That also signals me to look at MicroStrategy, MSTR. How is MicroStrategy looking? Yes, Palantir will break 17, bro. Palantir is a monster. No way. MicroStrategy got to 400, man. I was trying to scale in this at 310, and it just keep going higher. Right? Here's the wedge I drew. Just kept breaking out. I was waiting for a pullback, got scared, didn't jump in. I'm weighing the risks, though. The risks of earnings. I don't know how great their earnings will be. I want to wait till MicroStrategy is done with their earnings before I even think about it, because you just never know with earnings season. A lot of stuff going on there. What if they get replaced by AI? IWM still breaking out. Advanced decline moving up. Qs are starting to recover a little bit. S&P starting to recover a little bit. Easy, but it comes easier as time goes on as you gain XP. Just like with any other high barrier to entry. Yeah, the other thing about day trading too is that the taxes are tough, right? The taxes are a lot tougher too for people, because you could be, let's say you made $1,000 in like 2 weeks. Well, you're paying taxes on that $1,000. You're paying a 30% tax, let's just say 30%. And let's say you lose all of it in one trade. You're still paying all that tax, even though you lost the money. So it becomes you got to know what you're doing. You just have to know what you're doing. And you don't learn how to day trade in a month or 2 months or 6 months or even a year, right? Maybe you could learn in a year because you're in an accelerated program, but it does take time. It takes on average 3 to 5 years of consistency, right? See, consistently profitable trader. That's tough. All right. Oh, JP Morgan, slightly higher today. Jefferies upgrades buy rating. Okay. And JP Morgan does come out with earnings on Friday. So, we'll kick off the banks with that. Spend better, no less. Duke expert on his top 4. OpenAI, Rivian, Anthropic debuts. All right, let's do some technical analysis here. We know that tomorrow is the big day. My NIO is starting to recover. Let's go. Yeah, we know technical analysis we know that the real catalyst, right, is going to be tomorrow. The real catalyst starts tomorrow, which is going to be first in let me see. Oh, China new loans. Actually, this was I wanted to see what China was looking like. Let's see what this week. I guess it is at the end of the day for China. Yeah, I want to see China's new loans. Oh no, it was this morning. Okay, they moved it to Tuesday morning. New loans, China up. Loan growth year over year still falling. M2 money supply up April, May, June, Chinese June. Check this out, right? Check this out really quick. This is part of the macro. Maybe it doesn't seem like it matters, but I think it makes a big difference. All right, so keep your eyes peeled out. Keep your eyes peeled out for this, okay? This is China money growth year over year. You hear, right? You hear global liquidity is falling and global liquidity is no good. But trust me, global liquidity is just starting to turn up. And this is what markets rely on the most is liquidity. We're getting fiscal liquidity in the US. Yeah, the Fed's tightening, the balance sheet is running off, but we are pumping through fiscal policies, which are the government. Number two, Japan is pumping liquidity. Now here goes China's M2 growth year over year. It is moving up. So M2 is moving up. They're the second largest economy. And this is why I'm doing the macro, because a lot of people just don't see this stuff, right? They believe that the global economy is rolling over, deep recession, crash, blah, blah, blah. Hey, maybe earnings do fall or earnings do remain negative or remain, in recession territory over the next couple quarters. That is definitely something that is happening or could happen with some companies outperforming others. But for the most part, no, we're starting to turn. And then look at new yuan loans. So these are yuan loans, April, May, June, up, right? China is starting to stimulate. And plus they don't have the population growth. They have to print money. They just don't have the productivity means to actually grow their economy without printing more money and attracting capital, attracting other businesses. Can you guys hear that guy out there? That's loud, man. That is loud. All right, so yeah, China turning up, and I want to keep my eye on this stuff because I think that there's optimism in the market because of global breadth. Hey, appreciate the love there. Big man's coming. Thanks for the likes. NEP sounds good. Like a long just means buying opportunity, money locked and loaded for the drop, right? Yeah, locked and loaded. I'm sorry, that is so loud. Back to the calendar. So anyways, starting tomorrow, bro. India. Oh yeah, check this out. India. Oh, you can only hear me. Thank goodness. That is so loud. So looking at India, their money supply is also growing. I'm telling you, China, Japan, India, Brazil, a lot of these countries are actually, their QE cycle is just getting started. And then the US will follow suit. And then Europe will follow suit after that. Right? So that is India. That's the Indian M3 money supply. I don't know what their M2 is, but they are turning up. 5:30 a.m. inflation report. So right now, the year-over-year inflation is expected to come in at 3.2%. We're at 4%. Expected to come in at 3.2, 3.1. If we get to 2.9, bull market, we're exploding. All-time highs. No, I'm just kidding. Not all-time highs tomorrow, but we're going to break the 52-week highs for sure. That's my bet. We're going to break 52-week highs for sure if this comes in at 2.9%. And I think that's possible because of the base effects, right? Because look at this this is June. The highest print that we've had this whole year. Not this whole year, but the last 12 months was last June at 9.1. So we're really measuring against 9.1%. That should push us very low for this print. I'm excited about it. A lot of people don't think so. But car prices were holding up inflation, and we just got yesterday, year over year. Was it? Yes. Yeah, it was yesterday. We got year over year car prices. Can't even talk. Where are they? Pretty sure it was yesterday, wasn't it? Oh, that was Tuesday. Yeah. So we got car prices year over year, and they were pretty negative. They're absolutely negative. Used car prices year over year. Look at that. Look at that. So this has been holding up CPI also on the good side a little bit. So maybe on the core side, maybe I'm confused. There's so many numbers in my head right now. Either way, we are set to really fall beneath expectations. I think we're really setting up for that. And Wave 2 FOMO. You guys hear me say it. You hear it on here. By the way, I changed my name to Jay Fielder instead of Mind Growth. We're going to do some changes just to let you guys know. You're going to see my name change a little bit. We're going to change the branding up. It's kind of hard to just to get a little more reach. It's kind of tough to trust a company you never heard of, right? Or a name, a branding name versus a person. So hopefully that works. Either way, you've heard it here. Inflation's going to out surprise everybody to the downside, which is going to be a positive reaction. That's my view. Call it wild, whatever, but I think it's going to happen. And I think we see that wave 2 FOMO coming in. All right. So Fed Bullard is speaking. Economic optimism came in pretty flat. What is economic optimism? It's been negative. It is the opinions, outlooks on the economy based on a survey of 900 adults. Wow, out of 300 million. Who cares? Evaluate 6-month economic outlook, personal finance outlook, confidence in the federal economic policies. People don't have a whole lot of confidence when they're very negative, which is why I think the positioning is setting up for a squeeze, another squeeze to the upside. Another squeeze to the upside. I mean, how many people actually know that QE isn't just derived from the Fed? It is also derived. QE is a global phenomenon, right? QE happens in other areas of the world, and we're seeing that QE is starting up in China, in Japan, in Brazil, in India, blah blah blah. You can hear. Yeah, that is loud for you guys. That is loud for you guys. All right, so we'll get back to the we'll get back to it. I just wanted to point that out, kind of take a deep dive into, not a deep dive, but sort of look at what's going on globally. I think we are in that expansion territory. All right, so let's take I want to look at Tesla really quick. What does the fundamentals look like? Look at all this, man. I got a lot of stuff on here. I know that's kind of messy, but let's move this back to the big screen. All right, back to the big screen, and let me get rid of some of these. Got a lot of stuff up here, but we're still in an uptrend for Tesla. Daily chart. Why is this so off? Yeah, it shouldn't look like that. It should be looking like this. Invite to live. I'm not inviting. I can't say that on here. All right, there we go. All right. So here's what it's looking like. I'm just going to take this off. Here's what it's looking like though for the trend, right? Either way, Tesla has some support at that 261 level. If we do come down to there, it's going to come down to the overall index earnings on Friday. Inflation tomorrow could push this a lot higher. And really, if we draw the trend, right, we're still in that upwards triangle. We're still trending higher. Could break down again. For sure, could break down again. Go back to 261. But I don't know. It's not a whole. There's not really a true signal there. There's not really a true technical reason to be in Tesla, or not to be in Tesla. But there's not really a technical reason or setup that I am seeing yet. If we do consolidate a little more, then we'll start to see it, right? But it won't matter if inflation data comes out extremely well. It's just not going to matter. We're just going to keep moving up. You see Palantir dipped into that zone, took off, broke out pretty early. It's at 17. Bitcoin's still hovering. Bitcoin is still holding the 30K level. That's a good sign, right? As long as it holds, the longer it holds support, the more bullish it actually is. So we got that holding up there. Dang, I can't believe MicroStrategy broke out like that. Just can't believe it. I'm going to switch over to some tech stuff. Right. Oh, here we go. I heard Roku's moving. Saw a couple of people talk about Roku. Whoa, Roku had a strong move. Look at Roku's is near breakout zone also. So Roku's is about to break out. It has the cup and handle, head and shoulders. 75 is the level. Yep, 75 for Roku. Dang, man. I was keeping my eye on this too. But either way, it does need to break this 75 level to really get going, right? To get above resistance and hold. We need to see that for Roku. But there is what's really happening is there is market breadth coming into the market. As much as you hear there's no market breadth, there's not enough stocks moving up. They are strengthening. They are strengthening as we speak. Zoom back to 69. Thank goodness, because I've been long Zoom. FYI, if you guys don't already know, this is one of the big swing trades. I'm going to tell you what I'm doing. I am doing a big position trade in Zoom. I expect Zoom to run to 100, 125 and keep going. And this is a long-term leap call. If I get out of it, I'll let you know. I'll be on here live. But I do want to see Zoom go up. I think there's a lot of catalysts come in for AI. They're still the top video communications platform. They're still the top platform. And I know they have a lot of competition, but there's a lot of room in that, area. And the prices are down a lot. Their earnings are still pretty solid. They still have a lot of demand. And hey, if ARK goes up, if Tesla goes up, ARK goes up. If ARK goes up, the index goes up, and it brings Zoom higher. So this is why I'm looking out far, far, far. I'm looking into the end of 2024, right? I'm not just trading this for the next 3 months, 6 months. I'm looking for a big, long move from Zoom, right? And yeah, I just want to inform you guys on that. Open Door. I'm not in Open Door. I was in it, but I got out of Open Door because I just didn't like the price action. I got shooken out. I'm lying. I got shooken out. Okay, got shooken out. Didn't really find an entry. Don't want to chase it. That's okay. It happens, right? There's other opportunities. You just got to be very patient. Carvana. Whoa, Carvana still moving. I remember we talked about Carvana back at 12-14 as a short squeeze play. I didn't want to take it because of the way I'm looking at things, but it's still moving. Carvana is still short squeezing. So wow. That's all I gotta say. You guys who are holding ENPH, I'm sorry. It is forming a nice base though at 157, 160, but it's getting crushed. All right, SoFi. Oh man, SoFi with the big setup. Okay, SoFi has a nice long-term setup here, right? That's a big wedge. If I saw one, that is a wedge, right? It's a nice wedge there. Looks like it's starting to break. And if you are, yeah, SoFi looks good. What up, Asan? Shout out to the chat. Let me shout out the chat really quick. Shout out to the chat. Can you guys hear that? Let me turn off that loop. Okay, there we go. All right, let's get that music back on. Let me know if the music is too loud. So yeah, SoFi is looking solid, man. SoFi looks good. It looks like it's gonna break out. Good, good vibes. If we look at the moving average, I also want to look at net liquidity, global net liquidity. Look at that bounce in global net liquidity. We're gonna look this over. See, nobody sees this. Nobody sees this stuff. They're all extremely bearish, okay? And they don't see what's actually happening here. Penn. Oh, everybody pointing out Penn. We'll look at Penn too. Yeah, let's take a look at Penn really quick before we look at Penn. Okay, I know I jump around, but I get excited because of this liquidity indicator. Okay, take a look at this. Everybody's signaling. They're using Bitcoin. They're using Bitcoin, or they're using. It doesn't really matter what you're measuring against. This is global net liquidity. Okay, it's been rolling over global net liquidity, but this is only central banks, right? This is Fed, the Fed, ECB, Public Bank of China, Bank of Japan. They're not even counting government liquidity here. They're not counting fiscal. So I think it's stupid to really say, oh my God, liquidity is rolling over. This is not a stock. This is not a stock. Okay. Global net liquidity is not a stock. It's going to go higher. It's going to go higher either way. We'll check out Rivian, SoFi. Okay, just keep throwing the names out there. But I just want to give you guys some confidence here, right? Because there's a lot of bearish people and they know what they're talking about, but they just don't have all the information. Okay. So global net liquidity, what do we just see? Who's printing? China is printing. Japan, India. So global net liquidity is now bouncing. It's starting to bounce. This isn't even year over year. Year over year, it's going higher, by the way. Year over year, net liquidity going higher, not even counting fiscal. I just had to rant on that. Maybe only a couple of people understand what I'm talking about. But that excites me when I see that bounce in global net liquidity, because tech in general is correlated 97% with global liquidity. Coinbase moving higher because the crypto narrative continues to strengthen, because Bitcoin is the best store value by far. Ethereum is the new platform to generate decentralized finance. That is the platform for decentralized finance, right? I'm feeling the liquidity here. This earnings and this inflation going lower. I'm feeling a bull market. Wave 2 is coming. I feel it. I don't know. It's stupid though, right? I feel it. That doesn't mean nothing. It doesn't. So we're going to keep tracking the data, right? We're going to keep tracking the data. So We got what did you say? Penn. All right, Penn. And Penn is a gambling stock, right? How a lot of people are gambling, right? Sports gambling is very popular, a lot of demand. How good are the business models? I'm not sure how good the business models actually are, but I'm not an expert in business models. So what I am an expert in is technical analysis. So let's check out the technicals here. Okay. Technically, Penn looks beautiful. Beautiful descending channel. You got to be patient here though. This setup is you got to be patient. Oh, let me put that back on a loop. Get that music back on a loop. There we go. Trying to get the music going because the Stream Deck still doesn't work with the Mac iOS. Still waiting for a report back. But hey, what can you do? Just got to work with what you got. So Penn, yeah, Penn, beautiful setup here. Wow, wow, wow. That is beautiful, right? But what you really need for Penn, because it is entertainment, you're gonna need a lot of support from you need interest rates lower. This is a risk asset, Christian. This is a risk asset. Penn is a risk asset, meaning that it is going to be most sensitive to interest rates. And unfortunately, interest rates are still pretty elevated. The upside is they could be peaking. They could be peaking because interest rates look at two things: growth and inflation. Growth has been slowing, so they have no reason to keep climbing, right? Even though people said the labor market is up, well, wage inflation is not. Next part is, let me get rid of this RSI. We don't need it. The next part is inflation. And guess what? Inflation comes out tomorrow, and I think it's going to be lower than expected. And I think we're going to go lower. So we'll see how that works out. But Penn, wow, what a setup for Penn. Okay, what a setup at the lows. You need rates to go lower. So I think this thing really starts to launch off, right? Really starts to squeeze once we get above 40. Okay, so between these levels, 40 and that previous resistance, 40 and 35, you have a lot of room there, right? If you do get in Penn, your stop is below 21. That's a big stop though, right? That ain't no kiddie stop. That's a big stop from where it's at, right? 26 down to 23. That's a big drawdown. So you better have time. You better give yourself time for this. But Penn looks really great. It looks like ARK Invest. I mean, it is an ARK Invest, right? So at the end of the day, you also want to be watching ARK because ARK holds a big position. Oh, and what do you know it? ARK is breaking out. Why is ARK breaking out? This is beautiful. ARK is starting to break out. So that's going to bring up Zoom. No wonder Zoom and Roku are moving higher. Well, it could be Roku that's moving ARK, but I don't think that's the case. So, hey, risk assets are catching a bid. And part of that is coming from the fact, and this is the macro technical I always talk about. Part of that is coming from 10-year yields dropping, right? They try to go higher, boom, got stuck. 2-year yields try to go higher, boom, got stuck. And they're not going to surge higher if inflation comes out better tomorrow. They're not going higher. Inflation really has to go up. Or if oil breaks out, maybe they do. So we're watching oil. Anyways, back to those charts, back to those technicals. By the way, we are showing the technicals on YT. Sorry. What the heck, man? All right, there we go. All right, so back to it. Penn, right? Penn, Penn. Penn looks good. I'm really trying to scope out what am I missing here. Look at the moving averages, simple moving averages. We're still below them, so there's a lot of resistance there. I would say once Penn can break above 27.28, what is this, 27.50? If it can hold 27.50, and this is a day trader concept, if it can hold 27.50, let's dive into the 3-minute chart so you can see what I mean by hold, right? A hold would be you see the price break above 27.50 or some type of level, pulls back and supports it. So this, let's pretend this is 27.50. If Penn comes back down, supports that level and moves higher, maybe your entry is here, your stop is below 27.50, right? Because you want it to be strong. You want it to be supporting the level you got in on. You don't wait for it to, you don't get drawn down all the way back to the lows. You don't do that. You stop out because that is the level that you're wrong, okay? So if you do get support at 27.50, which this is not, this is just an example, then you get long Penn and you wait it out. If the market declines, you get out of your position. Don't get stuck on it. Don't be obsessed with having to win. Be obsessed with execution, right? Executing the right way. Anyways, going back to the big daily chart, okay, if you, let's say this is it, this is the bottom, Penn breaks out, gets over 27.50, holds it, keeps moving higher. Well, now you're in a big position. You got to hold that thing. This is why I say swing trading is very important, because you can day trade something And, I made 15, 20% on options, and the thing goes up another 50, 56, another 50, 70%, not on options, just the overall stock. So if Penn could at least make it back and retrace to like 65, 50, and this will happen when the Fed starts QE in 2024, Penn will explode, right? Penn will explode, a lot of demand. When the economy starts to reaccelerate, it will go higher. A lot of people, oh, inflation's higher forever. Get out of here, bro. You're tripping. It's not happening. Inflation is not going higher forever. It's not going higher forever. Prove to me, or tell me why. It's not happening, right? Too much production. I just don't see it. I don't think anybody sees it. People just say things they hear on the internet. As a matter of fact, I need to respond to this guy on TikTok who said he's a crypto guy too. I like him. I like his stance, but he's super bearish on the economy and all this stuff because blah, blah, blah. I just don't think people understand what's happening. Penn, NIO. Okay, we'll look at NIO also. What else do we miss? Oh, Caterpillar. Hey, oh dang, man, I get spam in the chat over here. You guys are spamming this chat. What do we got in the YouTube? Also, my boys over here on YouTube. Roku is in critical level. Yes, Roku critical level. Rivian is a short squeeze. RIVN. First, let me go to these guys. Wow. Yes, I didn't even see that. Yes, Rivian is squeezing. Wow. They had really strong deliveries from what I saw. Let's go down to that 30-minute chart. Wow, I didn't even see this. Yeah, Rivian is squeezing. Rivian is starting to squeeze. Is there an entry point here on Rivian? Possibly. Looks like it is starting. It looks like it's just holding this really strong momentum uptrend. This is a Momo uptrend, momentum uptrend. It doesn't pull back. It just keeps trending higher. Palantir does this a lot. Tesla does this a lot when there's a lot of demand. So yes, Rivian, that is a short squeeze. That's exactly what a short squeeze is looking like. Now, if you want to be patient, wait for the pullback, right? Wait for the pullback. Always wait for the pullback. And I think at 27.28, Rivian was up a lot. And also long term, you got to know the risks to Rivian, right? What are the actual risks? I haven't dived into it, so I'm not going to say anything. Technically, you just wait for the pullback. And you want the pullback to also coincide with the market support, with the market making new highs, or the market also, pulling into support and holding that level. But I'd say if you get above 25.50 on Rivian and hold 25.50, maybe has some more juice. But I haven't been watching Rivian. Good point out there. I haven't really seen it. You're deep into bonds. Yeah, if that pulls back, bonds will go higher. Look, either way, the Fed will buy bonds. They have to. Cute monetization of debt. They have to buy bonds at some point to monetize the debt. They've been buying a lot of bonds, and so bonds will go up at some point. It's always a good bet. I don't think it's the best risk reward versus stocks, because stocks go higher when they monetize, right? Certain stocks. Crypto goes much higher when they monetize the debt, but bonds will definitely go higher when they monetize the debt and you get that yield. All right, so that's Rivian. Roku. Hey, the fact that ARK is moving is a big signal. The fact that ARK and IWM, right, are moving. Coinbase is moving. Oh, that might be it too. Coinbase. The risk is on. I'm telling you guys, risk on. That's what we're seeing. You heard it here first, or maybe second, third, fourth, but it is risk on. It is the beginning stages of risk on. It is not confirmed yet, but we're seeing it because the dollar is rolling over. Interest rates may have peaked. The Fed is on pause. And even if they do hike, the market doesn't care because the economy is starting to recover. Inflation is making progress regardless of what you hear. Core, blah, blah, blah. Shelter is about to roll over. Energy needs to keep going down. And most of all, AI is a big theme. AI is going to increase 10x your productivity at 1/10 of the cost. So a lot of factors here. Also, earnings revisions. We just went over that. Earnings, if you weren't here earlier, check this out. We'll look at Caterpillar. Check this out. Earnings, okay? Out of 113 of the pre-reported earnings, we're seeing the highest beat on earnings. Well, it's not a beat yet. They didn't come out yet. But we're seeing the highest revisions or expectations for guidance to go up since 2021, right? Since 2021. That is a bottoming of earnings. Okay, look at the chart. Look at this chart. This is what we're seeing right here. Look at this. Red is starting to come down. These are negative revisions or negative expectations coming down. In green, they're going up. Positive is going up. We're starting to see the turn, right? If you follow my macro newsletter, you know we're in the turn. We are in the turn for the bull market. We're in the turn. Can it go wrong? Yes, but we're in the turn. You're not going to be perfect. but we are in the turn. Okay, we're in the turn, and you have to really pay attention to the details. And the details are, hey, are rates going higher? Is the Fed going to keep hiking? Is is oil going to break out? And so there's a lot of details. Not one. There's not one. Man, coin is exploding. Not one detail is gonna get you long or short, or bearish or bullish. You got to put them all together, weigh the variables, and see what the Fed does, not what they say. Right? What do they do, not what they say. So great. Penn looks good. Roku looks great. Rivian's already up a lot. I don't want to chase Rivian. Looks pretty good though. Caterpillar is always going to get stimulus, by the way. Caterpillar, right? Infrastructure, 1.1 billion, $1 trillion infrastructure bill from the White House. Caterpillar is going higher. I'm not a fan of Caterpillar. I don't trade it. I don't really like it. I'm not a fan because there's so many stocks. I'd rather be in big tech. But if I had to make a bet over the next 5 years, Caterpillar is going much higher. Over the next year, it's going much higher. A lot of stimulus coming in for Caterpillar to build. They are the best in their class. They are a monopoly in what they do. And their earnings growth, I haven't really seen yet. But, I think we're starting to also see on here on Caterpillar. If you're, I am looking at CAT over here, Mr. US, what is that? North Africa? Ghana? Can't tell. Anyways, Caterpillar is starting to see a golden cross here. Green above, not green, 50 moving average on the daily chart. We're looking at the daily chart here. 50-day moving average above the 200. It's getting ready to cross the 100 moving average. So a pullback would be nice. You get a pullback until those averages moving up. That'll be nice. Caterpillar, pretty solid there. All right, what else we got? Caterpillar. Call flow going in last night. Oh, Caterpillar had that call flow. Penn, Caterpillar. We went over that. Rivian. Yep. Tesla. NEP. He says NEP. Next to energy. Oh, I do not like these, man. I don't like these. Tesla's going to destroy all these companies. No, I'm just kidding. Next to energy. Starting to bottom out. I know a lot of energy plays, utility plays should do pretty well. I don't know a whole lot about them, so I don't have the fundamental backdrop on them, like how they're playing out in the economy. I can't say too much, but what I will say is if you're bullish on this, above 64 is your zone. Right next is energy, 64. Excuse me. Above 64, that's your zone. Tighten it up there. There we go. All right, so yeah, next to energy, we're in a bull market. We are in a bull market. We're at the turn. We are at the turn. Okay, we are at the turn. Bukowski, I hope inflation goes down indeed. I'm balls deep in bonds. I don't know if I can say that, so I'm gonna say I'm basketballs deep in bonds. Yep. What would you buy tomorrow if CPI is bullish? Bitcoin. There's a reason why Coinbase is exploding right now. Wow, coin is exploding. And we looked at coin yesterday. It is ripping into that area. This is good. This is a good setup here. Not just for coin, but for my assets. I'm gonna be a little selfish here. I'm waiting for Zoom to break out. Coin breaking out. Who else is it? Coin breaking out. Roku breaking out. Tesla about to break out pretty soon. They're gonna smash earnings in my view. Brings up ARK, and that all pours into Zoom no matter what before they actually have earnings and announce their AI. Maybe I'm wrong, but that's what I think. Either way, what would I buy? Bro, it's ETH and Bitcoin. Like, I know it's like, stocks, whatever. When these things move, they are going to move, right? They are going to move. They're starting to turn up. I've seen the cycle before. I've seen stock cycles, but they're nothing like the crypto cycle. The crypto cycle is just starting to move. And the crypto cycle is much more massive than a much bigger mover. Is it more uncertain? Not Bitcoin. Ethereum, a little more uncertainty, right, over the long haul. But yeah, I would be buying Ethereum or Bitcoin, right? Possibly Tesla, but Tesla's up a lot. Okay, Tesla's up a lot. You could be, I'd be Tesla, Bitcoin. If you really know me, or if you really want to hear what I think, Bitcoin, Tesla, Ethereum, Palantir, and Chainlink. Those are my top 5. So, really that's what I'd be looking at. That's not a real trade. I guess you could call it a secular trade, obviously, because you're always trading, right? You're always trading. Even if you invest, you're trading your time or your money for that investment to later off trade it back into buying whatever it else, retirement or a house or whatever it is. So those are my bets. Those are my bets. Palantir is looking pretty sharp there too. Nice. Palantir looking sharp. HPQ, thoughts on HPQ? Let's look at HPQ really quick. HPQ, whoa, HPQ starting to move up. What else do we have on here? Bitter Coins. What up, Broken Testicle? All right, so Bitter HPQ. I don't know who is HPQ. What do they do? Who are these guys? Don't know. But it is breaking above that trend. That's a technical breakout right there. HPQ, that is a technical. I bet you they have a nice wedge pattern on the intraday. Look at this. Intraday, any patterns that we saw here? A little bit. So HPQ is breaking out for sure, but you need follow through from the overall market, because I don't know what this is. I really don't know what they do. HPQ computer. Okay, so hardware computer. I don't I like to have theses, and I don't really know the thesis on HPQ. Technically, it is breaking out though. This is a technical breakout on the big term charts. Has a little bit of resistance up here at 30.35. Maybe cash it on a pullback. So maybe the perfect scenario for HPQ would be to form another pattern up here, right? Form another pattern up here at these levels, because it does have a lot of resistance right here. Here's the resistance. Next resistance. So it has some time, but if it does start to wedge up here, or maybe it doesn't do a wedge, maybe it just, flat triangle, or what else kind of pattern would you man, I can't even think of the pattern. What is the pattern? Not a wedge, a channel, falling channel, flag. There we go. Flag pattern. You see a nice flag. You could see that too. So it's breaking out technically though. That was the breakout pre-market, got above that level. Maybe it comes back, fills the gap, supports. Who knows? Laptop and servers. Okay. Will CCIP allow Link to leave ETH? No, CCIP will not allow Link to leave ETH, but what it does is it allows any other. CCIP allows, shout out to Isaiah, my brother taught me this last night, as a matter of fact. CCIP enables interoperability between any blockchain. So if you want to swap, let's say you're on Uniswap, right? Uniswap, you can't actually swap a coin that is not in the Ethereum network. You can't swap that, it has to be wrapped. But with Chainlink, you can now swap any other coin outside of the ETH ecosystem with the ETH ecosystem coins. Even bigger, CCIP allows for cross-chain interoperability for central banks, right? For central banks. So, because stable coins are a big thing. Stable coins are being developed right now. So, in some sense, it is not, CCIP is not, how do I say it? It doesn't really need to be on, it allows separation from different blockchains and the other blockchains to connect with each other. That's going to be big for DeFi. That's a big problem in DeFi. You don't really have DeFi without Chainlink, without oracles, without interoperability. You can't really run DeFi networks. It's all hype without it. That's why we're so big on Chainlink, because we believe that is the best technology for interoperability for the DeFi network. If you want to go look it up, go check out Bank of America. I think it was Bank of America or Citi, who said that, hey, DeFi cannot run without Chainlink. Very bullish on Chainlink. This was a couple of years ago. But yeah, CCIP does a lot of very explosive things. Oh, what up? Just stopped to say, just another trade today. I'm gonna start to eat dirt. I don't deserve food. This guy is funny, bro. Broken Testicle might be one of the funniest dudes on the chat. Chain is okay. So yeah, Chainlink is chain agnostic. So chain agnostic. You know what that means? Hewlett Packard. Oh, that's Hewlett Packard. I didn't realize that was Hewlett Packard. Interesting. Okay. DeFi, that's literally not true. DeFi can run without Chainlink. Well, it can't run without oracles is sort of my point. DeFi can't run without oracles, right? Do you disagree with me there? And nobody has a better Oracle network than Chainlink. I'm pretty sure that's it's pretty common knowledge. Here comes the war. Here comes the Chainlink or the the crypto work. Chainlink gets replaced by Oracle, secured by AIN layer. By AIN layer. Not sure what that is, but Chainlink is the #1 Oracle network, and I don't think I'm pretty sure you can't argue with that. It's the #1 Oracle network. Chainlink oracles aren't the best right now. Most DeFi protocols are transitioning to oracles. Oh, look up AIN layer. Isaiah, do you know about AIN layer? Here, let me type it in the chat. AIN layer. Sounds like we got a maxi here. People really get hurt about, really get serious about their. Hey, I'm glad you have the conversation. People really get serious about their crypto. So AIN layer, but yeah, we'll look it up. AIN layer. I've never seen that. I'm not the expert here. AIN layer. What is that? What is AIN layer? Most DeFi protocols are transitioning to AIN layer. So Isaiah, that's what they said. Most DeFi oracles are switching to AIN layer. Linkbrain's down bad. Yeah, they're down pretty bad. But they're working with Swift, right? They're working with the Swift network, so it's the best Oracle. You're gonna have to. I don't know how you say that Chainlink is not the best Oracle network. It's been proven. Almost all DeFi projects use Chainlink. They're the most secure. Like it's really not debatable at this point. You can debate little small things, but as far as the evidence, Chainlink is the best Oracle network. Right, it has the best oracles, strongest network, most nodes. That's why Swift is using it, and yeah, that's. But I'm not the guy that can probably argue the details. So that's just from what I know. That's just crazy. What? They're making their own oracles for their own protocol. Right now they are, but they won't be within 9 months. Okay, so yeah, there's the expectation. There is the expectation that there is a better oracle than Chainlink, but that's not the reality. Sorry, that's just not the reality. They're not better. So you could say they could be better, right? Just like Rivian could be better than Tesla, could have better electric vehicles, just like Ford could make better, could, should, would, but they can't. They're just, not that they can't, they're not better. The infrastructure is definitely not better. Tesla has the best EVs on the market by far, not even close. They're the best selling car also, right? So I'd say the same thing for Chainlink. Most people use it because it's the best Oracle network. So yeah, 9 months, we'll see. I guess we'll check back in 9 months to see if the AIN layer has surpassed Chainlink. 1 trillion secured by Chainlink this year. Oh, here we go. Here goes your evidence, okay? And this is really good. Chainlink has secured 1 trillion. Has secured 1 trillion this year. Okay, 1 trillion, not AIN layer. Oh, I'm missing the point. What is your point then? So Chainlink has secured 1 trillion. Name one of top 50 projects that uses an Oracle other than Chainlink. Name one top 50 project that uses an Oracle other than Chainlink. Oh yeah, so name one of the. So basically, name one of the top 50 projects that uses an Oracle that is not Chainlink, I guess. Yeah, right. So, I'm not the one to argue that, but my brother will because he knows Chainlink pretty well. What up, Norberto? What AIN layer is not an Oracle. Oh, AIN layer is not an Oracle. Okay, so AIN layer is not an Oracle. You just believe AIN layer will produce better oracles than Chainlink. Okay. AIN layer will use Chainlink. So maybe here's what I'll say. There's nothing wrong with believing, right? There's nothing wrong with believing. But when you look at the hard evidence, Chainlink is by far the monopoly in Oracle networks, not even close. And there's a reason for that. There's a lot of other people try to do oracles, but Chainlink just has better stats. They're ahead. They're a monopoly in their space. They're dominant. Chainlink is the dominant Oracle network, right? So until that changes, that's just what it is. And it's still small. It's a small protocol, right? It has a lot of reach. It has a lot of room to grow. All right, so okay, we're talking crypto here. This is good though. So I'm suggesting you look into Ainlayer. Okay, dude, there's 1,000 projects, bro. There's a 1,000 projects out there, so it is tough to really how do I say it? Take a look into every project. My brother will take a look into the project Ainlayer, and then we'll have some feedback on it. So what is your overall thesis though? I don't want to trash Ainlayer. I don't know it exactly, but what is your overall thesis? Just usually most coins are just trash. Most of them are not utility. Everybody believes in them. They're trash. So that's why I'm taking that bias. But tell me, what is it that you believe that Ainlayer is so strong about? Based on price, I'm not stuck based on price. Chainlink is down like 90%. I'm not even arguing for another token. I'm just suggesting you look into Ainlayer. Let's see. Are you aware of what EIP 4844 is? Yeah, that allows for more data. Mr. EIP 4844. We just looked at it yesterday. It allows for basically, just to break it down, I could be wrong here. I'm pretty sure this is it, but EIP 4844 basically allows for more data transfer. As a matter of fact, I have that in my notes. Hey, at least we got some crypto talk here. Most people don't know too much about crypto stuff. But yeah, we'll put up coin market cap. Matic, price recovery, rally hit standard charter forecast. Can you actually put it in here? Maybe not. Go to decrypt. Restaking, it's time to buy crypto. It's not a coin. Restaking. Okay. Hey, I believe you, A. I know it's tough to really throw. Go jump in the YouTube. Oh shoot, I can't say that. My bad. If you jump on the, let me see, on YouTube, there's better commentary. Just put it that way. You can say more. I think you can give more characters on the YouTube. And there's actually a really strong crypto person on there. So I would, if I were you, I'd jump onto the YouTube and kind of give your thesis and what you're talking about, because TikTok kind of sucks when it comes to typing and explaining things long form. And I can't really, it's in my bio, I can't really say it. If US 30 rally, crypto rally too. Yes, 30, yep, Prakash Pandley. So what's even going on in the crypto space? What's going on here? What do we got? We'll get back to the stock market, but crypto's starting to get interesting here. Hey, we're all bullish on crypto though, right? Rain there, or whatever it is, Ain't there, Chainlink, Matic, whatever you believe in, Dogecoin, they're all going higher. They're all going to go higher. Not all of them. Most of them won't. Most of them won't make it back to all-time highs. Coin finally starting to pull down a little bit. Shiba and Doge, go for it. I think they go higher. I'm not a fan of Shiba and Doge just because of the uncertainty, but hey, they probably go higher. All right, anyways, what are we even looking at here? Grayscale cries file for SEC approval, different kind of Bitcoin ETF. You can now store your Bitcoin private keys as colors. Netflix taps AI to push viral effects beyond the green screen. Fade protocol Discord was not seized. Okay, a lot of stuff here. Either way, we'll get back to the charts. I just, kind of got caught up in the whole Chainlink stuff. You could talk about that all day. Oh, where there's a really good setup and they have the most explosive options is Teladoc. I don't know if they ever make it back because their EPS is really trash. Their EPS fell 90%, their earnings per share. But if for some reason they break out of this wedge, right? Teladoc, if for some reason Teladoc breaks out of this descending wedge, that would be a nice trade right there. And let me put them on a log chart. They can't really tell. Got to put these big stocks on a log chart. So if it happens to break out, it looks bearish though. It looks like it's going to break down. If Teladoc breaks out, right, their long-term options are very juicy. The gamma is insane. The gamma is insane. But there's a reason why the gamma is insane, because the fundamental prospects are disgusting, even though Cathie Wood is still bullish on it. Maybe she knows something we don't. But look at this RSI. RSI is still climbing, although the price is falling. That is a bullish divergence. So I'm still keeping my eye on Teladoc, right? Best case scenario, Teladoc breaks out, you get in. If it doesn't work out, well, at least you're up, so you don't really lose. You just get out if the fundamentals change. But we'll see on earnings season how these things start to work out. Rates are still a little too high, though, for a lot of these risk assets. They're just a little too elevated, in my view. Roku broke above resistance level for a couple of minutes. Yep. Roku broke out for a couple of minutes. See, where's that Roku at? 75? This is extremely the fact that ARK, like, let's look at all the indexes, right? Let's just take a step back. You know, you hear the people, we're in a bear market, bro. I'm sorry, you're tripping. We're not in a bear market. We're not in a bear market. Like, the economy is literally recovering with rate hikes at 5%, or the highest increase in rate hikes ever. Well, second half, we're going to fall apart. Okay, good luck with the fiscal policy, and good luck with the Fed not, starting to stimulate again. Anyways, S&P's up, so we're consolidating at the highs. Q's, technologies up even more, consolidating at the highs. Dow is consolidating in between, but it's down like 7%. IWM starting to break the trend. IWM is starting to break out, I believe. It needs to get above 190. I don't know where my IWMers are at, but we need to get above 190. Once we get above that level, market, it's really hard to argue there's no market breadth. It's really hard to argue that. Now, even more is we got ARK breaking out. ARK is literally, definitely starting to break. Okay. All the haters, I see them in the comments all the time. Cathie Wood, she's crazy lady. Bruh, these guys have never studied anything in their life. They've never been in, like, what? Like, there's a reason why ARK went up so much before, because it is innovation technology. And timing is everything. Yes, timing is everything. So you got to time it right. But if over the long haul, ARK literally looks like any explosive stock that you'll ever see. They go up a lot and they come down a lot and they go up even more. So we'll see if ARK gets back to all-time highs. Although they are carrying a lot of genomic stuff that really needs regulation. So a lot of it just needs regulation. But the fact, anyways, the signal here is that ARK is breaking out. Risk is back on the table. Risk assets are back on the table. AMD pulling back some more. I've been looking at AMD for a while, but it just didn't have that push. It got out. Just couldn't hold that push higher. So AMD's not quite there yet. I still like Square. Square starting to... Square is moving sideways. We'll see how that plays out. AMD is, though, descending, though. It is descending channel. I think you have to go, I think we got to go to like the 30-minute to see this. All right, there we go. Just get rid of this. All right. Yeah, this is AMD. So it's in a deep, this is sort of bearish. I'm not gonna, lie here. It is bearish, but AMD is very explosive. It's tightening up. The buyers are stepping in. If it starts to hold, why does it keep doing that? Zoom out. If it starts to hold and break this downtrend, should get pretty interesting here. Tesla getting weak. All right, I'm gonna get back to the other chart actually. Also, we need to see what CNBC is talking about. See if they got any good stuff going on. Coinbase is just smashing it there. Coinbase is killing it. There's Coinbase, had that nice flag pattern, and it's starting to break that flag pattern. What is the main catalyst here? Oh, they still don't have it there. All right, cool. Let's look at the indexes, big indexes. What are we looking like? What are we looking at here? ARK had a huge move. Kathy Wood, well, that was yesterday. Kathy Wood pours 3.3 million more into this chip maker. Who is it? Is it Nvidia? Nope. It's probably AMD. Maybe not. All right, let's see what they're talking about here. Oh yeah, and also Microsoft still cutting, which is, I bet the price of Microsoft, is Microsoft going higher? MSFT, no, sold off initially, but usually price cutting is, right before earnings. What does that tell you? They want to get their guidance up. They're starting to cut people they don't need that they can replace with AI. Sort of looks like a Head and Shoulders, but we'll see going into earnings how they actually do. Earnings are set to be pretty mixed. Probably a lot of good stuff. Bad stuff. Apple, Mac market share jumped even though PC sales fell for the 6th consecutive quarter. Where's Mike Wilson, man? I want to see Mike Wilson, his bearish take. I know he's still pretty bearish. Void stocks as a recession looms at year end. Oh, here we go. Is this him? Is this Mike Wilson? Well, we're going to read this. This is a Mike Wilson, avoid stocks. Love the bear case. Got to read the bear cases here. We're definitely going to read the bear case here. But before we do that, I'm going to drink some coffee from Starbucks. Nitro. You guys ever drink Nitro? Nitro coffee. Dow is starting to recover here. Oh yeah, coin just got dumped there. Okay, so look at, we got the Dow starting to climb. Dow needs to get above 341. Just want to throw that in your eye. On the right hand side, QQQ, big tech. Today, I really don't think today is going to do much though. We have a CPI tomorrow, right? We know pre-market there's going to be a big move. Whether CPI is good or bad, we're going to get a big move in pre-market, and that's really what's going to count. Ooh, Tesla getting stuck there. Starting to roll over. Maybe fills the gap at 261. All right, so here's what the guru says. Keep coin up here. There we go. We're gonna keep coin, keep a track on coin, and then on this side we'll keep SPY up because I don't have the SPY on the right hand side. Dang, SPY bounce right back to the highs. Okay. These are 3-minute charts, by the way. All right, so investors should buy more government bonds to brace for the likelihood of a recession hitting later this year. JP Morgan's top equity strategist. Why aren't they saying his name? Maybe they say it later. He says investors are increasingly deserting defensive positions as more market participants expect a soft landing scenario for the economy. This comes on the heels of a strong start to the year, with the NASDAQ composite climbing more than 30%, notching its best first half since 1983. But JP Morgan's Marko Kolanovic, yeah, I've heard him, Kolanovic, said investors are mistaken and continues to see year-end recession as his base case outlook. He recommended pivoting to more government bonds to prepare for the risk ahead. Do you agree? Government bonds do look juicy if there is a recession. This benign and complacent pricing of recession risks, along with increasing signs that the credit cycle is emerging, makes us turn more negative on corporate bonds and more positive on government bonds, which we should see BBB spreads going lower if that's the case, which is literally corporate bonds versus treasury bonds. And we're not seeing that yet. We're not seeing that. So he's saying that people are going to start dumping corporate bonds, buying government bonds. We therefore trim our allocation to credit by shifting 2 percentage points away from the corporate bonds and into government bonds. And if that move were to be reflected in the actual market, we'd see BBB spreads actually starting to climb. In addition, the strategist is encouraging investors to stay defensive in their portfolio, saying he has overweight allocation to cash and underweight allocation to equities. Hey, we've been talking about this for a long time, which is there are fund managers, professionals who are very smart. Hey, maybe they're right. Who are very underweight equities. They're underweight risk and they're overweight cash. Still got a lot of cash on the sidelines. Risk reward remains poor in equities in our view, given a decelerating economy with a likely recession starting in Q4 of 2023 or Q1 of 2024. So next January, right? December or October, September, October, November, October, November, December into January, February, March. Softening consumer trends, excessive COVID savings are expected to be exhausted by October, and restarting student loan repayments. Hey, this is all true. Becoming a $10 billion a month headwind. Rising investor positioning and the significant re-rating of stocks so far this year, Kalanovich writes. Fair enough. What would erase all that is more stimulus from the government. That would erase all those headwinds. And also inflation just collapsing. People are going to jump in, right? Investors are going to jump in if inflation collapses in general. If it doesn't, and we do head into a soft recession, well, yields come down, right? Yields come down because everybody buys up bonds. And if yields come down, that's actually helping equities. So either way, equities still win over the long haul, because obviously you don't go buy NVIDIA at the top. But if yields come lower, that helps risk assets like ARK Invest. All right, so we read that. Now, what is this lady saying? What do we got going on here? UK basket wage growth, UK wage growth, don't care. Let's see, NASDAQ IPO Friday. We're starting to see some IPOs coming to the market. What are we talking here? Emerging markets. Billionaire CEOs unloading stock, 9 billion shares sold in the first half. But who knows why? Man, they have so much. Oh, here we go. The bull case. I want to hear these bull cases. Wage pressure weighs on the Fed. Where's the bull case at? Well, this guy's talking macro data. I guess we can listen to him from Evercore. From Evercore macro data. See if he aligns with what we think. Where is Tesla going? Tesla's going to the moon over time. BNBL, a great long. Let's go. What up, Dimaj? Where is Tesla going? Bourbon Assassin. Well, we do have inflation report tomorrow, so Tesla's probably going to come back, fill the gap at 261, and then after it fills the gap, we will see if it keeps falling from inflation, from the inflation report, or if going into earnings. I don't know. I really don't know where Tesla's going in the short term. I can't really tell you that. Over the long term, though, the setup is pretty clear. Whoa, what is that? Oh, okay. What up, Dimaj? Appreciate it. Thanks for the heart. Man, that scared me. I was like, what is on the screen? I didn't put that there. That's crazy. I didn't even know you could do that. So yeah, let me throw that up. Let's listen to this dude, what he has to say. Let's do some analysis, some macro analysis here, and then we'll jump into some other stories. But I want to throw this up. There we go.
And collaboratively to address regulatory concerns. That's Microsoft's vice chair. Sarah.
Yeah, again, big news that the ruling now is that Microsoft and Activision can close its deal ahead of the August deadline, went against the FTC, in a blow for Lina Khan, the head of the FTC, and the Biden administration, which has been tough in trying to block these acquisitions.
Meantime, turning to the Fed and expectations for July's rate hike, all but secured. Our next guest says that last Friday's jobs number probably lowers the probability of another hike in September. Joining us this morning, Evercore ISI Vice Chairman Krishna Guha. Krishna, great to have you back. I'm curious to know what you saw in the print that makes you think September may be more of a coin flip.
Yeah, so look, I think what we saw in that latest jobs report is further confirmation that the U.S. labor market is gradually cooling. Is it happening quickly? Certainly not. Is there imminent danger of recession? Certainly not. But the payroll numbers that had been the standout red-hot feature of this labor market, they are slowing. That's what we saw in the data from Friday, not just the last.
Hey, appreciate you guys with the support. Bourbon Assassin, DMA, shout out to you guys. Shout out to the chat. Appreciate the support. Hey, for sure, this guy's right, man. As much as you hear, the labor market is so hot, the Fed has to keep hiking, it's decelerating. It's decelerating. The labor market is actually falling, okay, but at a slow pace. It's fine, okay? It's just been coming out hotter than expected. Everybody was expecting a complete collapse, and it's not happening. All right, so it's slowly falling. But guess what? That fiscal stimulus will hold the labor market together unless we get some type of black swan. So let's finish up here.
Last month, but with the back revisions to the prior 2 months. Payroll gains still running well in excess of what will ultimately be a steady state for the economy, but they are slowing. Now, I think that gives us confidence, A, for sure the Fed's going to be going ahead with that hike in July, but if these trends continue, they probably would be willing to drop that second hike, which right now feels like it's penciled in possibly for November.
It kind of reminds me of what Ed Hyman's been saying last couple of days, and that is normally a tightening cycle brings about some kind of crises. We got the taste of one in March, and yet they then hiked again, which Ed would argue is a bit unique, no?
Well, look, I think the Fed made the assessment in March that they could walk and chew gum at the same time, right? They were very aggressive with some of the financial stability interventions, like the new bank term funding facility to give banks cheap long-term funding for those underwater treasury and MBS portfolios, and taking aggressive actions on the one hand for financial stability, supporting the banks.
I see you big man's coming NIO with the support off of VWAP. Very sharp pullback, support of VWAP and PDC. Looks pretty good.
Gaining the ability to raise rates further. Now, I would say, in all fairness, looking at what we've seen since March, we have not yet seen very severe evidence, very substantial evidence of credit crunch or credit restraint emerging. I still think that over time we will see.
I agree, dude. There's no BBB spreads are not spiking. So the credit fear is not happening, even though they say it is. It's just not happening.
Some meaningful credit restraint emerge out of the more stressed parts of the banking system. But certainly it's not been severe, and it's not very pronounced in the data so far. So I think the Fed can justify having continued with a little bit of hiking since then.
I think I'm going to disagree with you, Krishna, on the September thing out of the jobs report, because the last thing that I heard from Chair Powell when we spoke in Sintra a few weeks ago is that there's still more risk of underdoing it on inflation than overdoing it on growth, and that he's not ruling out back-to-back interest rate hikes. 200,000 jobs may have been a miss, but it's still creating 200,000 jobs with wages rising 0.4%. That's not really a cause for concern on the Fed hikes.
So 100% agree with you that we certainly, this isn't a labor market that suggests we're wobbling into recession. It's a solid but decelerating labor market report. So I think it's healthy in that regard. You're right. Chair Powell was at pains to say that still thinks that the risk to inflation a bit greater than the risk to growth. And as growth continues to look resilient, that calculus can remain in place for sure. And still, at least, a soft baseline in the Fed's eyes for 2 more hikes, absolutely. And not ruling out consecutive rate increases, yes, but, and there's a big but. First of all, why is he saying this stuff? He's saying it partly because the data is more resilient, but also because I imagine that the hawks must have been really upset about what he said in his prior congressional testimony, which is when he said, another rate hike, perhaps, and I quote, perhaps a second hike, right? That would have got pressure from the hawks. Hang on a minute, I thought we'd agreed the baseline was 2. The other thing is, Powell has been edging in a direction of providing a more optimistic assessment of the progress that they're making rebalancing the labor market. I do think that that's key to the outlook for that second hike. And I do think that the data is continuing to edge in the right direction there.
That is true. Powell's been a little more dovish lately. He's been a little more dovish, or at least not as hawkish as he was before. I know this guy has a lot to say. I kind of agree with him. Sounds like he's from Europe. Let's go NIO. Wednesday's important. They already priced in the hike. So, yep. They already priced in the hike 100%.
We're taking the clues where we can. NFIB is a good example today. Krishna, we'll see what happens. It's going to be around before we know it. Krishna Guha, Evercore ISI Vice Chair. Thanks.
Thank you.
When we come back, is it time to invest in Europe? New prime brokerage data from Goldman Sachs shows hedge funds are cutting back on U.S. stocks and pivoting to Europe. We'll break down the new numbers next.
Yeah, the German DAX all-time highs. I don't know about these other indexes, but the Europe is pretty strong, regardless of the weakness that we've seen. Europe is still pretty strong. So, got some more stuff to react to. Is this the bull case for Affirm? AFRM? Anybody long on Affirm? I don't even know. Really haven't looked into them. Let's switch this up. Share screen window, because there's another video I want to react to. Here we go. Oh, no, not this one. What? See if I could pull it up here. There we go. This is about wage inflation.
Inflation following Friday's jobs report, which showed stronger than expected wage growth and weaker than expected employment growth. That's at least what Jim Grant says. He is the founder and editor of Grant's Interest Rate Observer. He joins us on set right now. And Jim, a lot of people looked at that number and thought, oh, good, it's not too hot, not too cold. But I think he makes some valid points when you say, look, the jobs numbers were lower and the average hourly wages component was up.
Yes, a little bit of the spritz of the late 1970s. Wasn't terrible, but it underscores the difficulty of the degree of difficulty of the Fed's job now. It reminds me a little bit of Captain Sully on the Hudson. It requires a great deal of precision and not a little luck to do what they say they will do, which is to
Bro, get to the point.
The consequences of 10 years of artificially low rates.
They're doing this, trying to get the rates set at the right way, while also trying to launch QT, quantitative tightening. That didn't work so well 4 years ago when they tried to do it, and Jay Powell even kind of pointed to that in his testimony before Congress.
Well, the Fed's balance sheet is very much like the late Silicon Valley's balance. Silicon Valley is still with us, but it's very, very much resembles the balance sheets of the banks that didn't make it through March, because they have an immense mark-to-market loss in excess of $900 billion as of March. And they're losing substantial amounts on operating, just in operations. So their losses are far greater than their capital. So the Fed itself is a symbol of the difficulties of the world in which rates are now being normalized. The Fed says that this doesn't matter, but its accounting is at pains to obscure it from the world. It's not exactly a practical problem, but it is a highly important symbolic one. think the world.
Yo, this guy is way too boring. I didn't know it was gonna be this bad. He's trying to give a whole story on this thesis. Just give me the facts. Why are we headed for stagflation? They give this whole sad story. Oh my God. I just want to read it. I don't even want to listen to this guy. It's monotone. Here we go. Maybe this is where he gets to the point.
Ratios and the speculative grade bond market. Those companies are covering their interest with respect to, say, the coverage ratios and valuation of NVIDIA. The undeniable signs of stringency throughout finance. Not so much in the valuation of NVIDIA, 40 times revenues, but certainly with respect to, say, the coverage ratios and the speculative grade bond market. Those companies are covering their interest charges at much narrower grade level than they have been in 2022. There are a record number of bankruptcies going back 2010, corporate bankruptcies in the first half of this year. So rivets are popping kind of off stage. And the question for the Fed, the question for all of us is, will the consequences of these rates now playing out in these examples of stringent, will the consequences overwhelm the Fed's attempt?
Well, that's what I was going to say. Do you think that this is a replay of 2008 where...
Oh my gosh, he still said nothing. Just get to your point. Man, this was a waste of time. That was a waste of time. See if I can hit it. Stupid. All right, well, at least I got this up. Okay. Not Decrypt. No, we're not looking at Decrypt. There's another bull. Let's see, what was this one? This is
Chase Freedom Unlimited. You can cash back through.
SB will gain 100 points in the next week. I think we already listened to this. I think we saw Tom Lee already talk about it. That's not the one I'm looking for. Well, let's respond to this guy. I said I would respond to this guy on TikTok. So, see if we could do this correctly. Make sure I'm not showing nothing I shouldn't be showing. So this is a guy on TikTok. Okay, let's respond to him. Let's see if I can make this bigger. There we go. T-Doc has a good setup. The floor was 2232. Yep, 100%. I was watching a video. Oh, I forgot to put this up here. I was watching a video on TikTok. The guy was saying the rally we see is the same rally 2008 before the second big crash. Why people compare now to 2008? Yeah, I'm about to play this. It's just we have this very loud dude over here cutting the grass again. Oh man, we got some bots in the chat. They really got real bots here. All right, let me wait till this is done. This is loud. Sorry. Very loud. It's annoying. I thought this guy already cut the grass. Also, there's another video I need to find. It's a JP Morgan analyst, and he's pretty bullish. I wonder if I could find out my other YouTube channel. See if I can switch accounts. Can I switch, or is it gonna log me out? Oh well, if it logs me out, logs me out. It's not loud on YouTube. Yeah, it's not that loud on YouTube. I'm gonna play it. It's just I'm also looking for this other video. I'm gonna play this guy. But yeah, this dude is pretty bearish. He's a crypto guy. So hey, we're all long crypto. I just disagree with him on a couple points, and I wanted to respond to it. So we'll definitely respond to that. Library. There we go. Here's the JP Morgan. All right, I got that set up. Got the JP Morgan guy set up. Perfect. All right, cool. So let's get this going. A lot of people earn and learn from home. Yeah, what a bot. Let's go. Motox, like the mess out of Firm, Amazon. I didn't know a Firm works with Amazon. All good. Comment. Welcome, please. All good opinions. Welcome. Let's go. 100%. Let's go. All right. So let's hear what this guy has to say. Why isn't the sound on? Oh, duh. All right, cool. Very smart guy here, by the way. Yeah, he's a smart guy, knowledgeable about the markets for sure. And this is good commentary. So I did let some people know I'm going to respond to this guy. He's on TikTok. Very smart dude. And but disagree with them on a couple things. All right, let's go.
Iceberg thinking we're in a new bull market. But underneath the surface, the economy is slowing at a faster pace. There's a clear divergence between.
Okay, number one, not true. The economy is not slowing at a faster pace than expected. The economy is actually slowing at a slower pace than expected because everybody was expecting payrolls to drop off a cliff, the housing market to continue to fall. Now, he does go over the PMIs later, so that is true. But the economy, the labor market, at least, the economy is going to be business activity, labor market, consumer. Guess what? The consumer is not decelerating faster than expected. The labor market is not decelerating faster than expected. The business sector is not. Services are up. I don't think he even points out the fact. Actually, we'll get there. So, and I don't dislike this guy. I just get really intense about how I'm responding. So he said the economy is slowing faster, and it is not. The economy was expected to slow faster, and it isn't. It's slowing slower. Why do you think GDP revisions are up, bruh? GDP revisions actually went to 2% from 1.4. Well, the Fed now revised it up to 2.3%, but last week or 2 weeks ago, it was expected to come in at 1.4, and it came in at 2% quarter over quarter. So I don't know where he's getting his data from, but that's actually not true. All right.
Markets and the underlying fundamentals that most are choosing to ignore because stocks only go up, bro. Now, I have to recognize that being early also means you're wrong, because going into the first half of this year, I did not expect NASDAQ to have its best year-to-date performance on record. I also didn't expect the AI narrative to cause so many people to FOMO into the markets this hard.
Okay, now he didn't expect NASDAQ to go up so much, of course, because NASDAQ priced in a recession last year. Doesn't mean you can't get another recession, but it did sell off pretty quick. Also, he's highlighting retail investors bullish on AI stocks. Retail investors did not push up NASDAQ. Big funds did, right? You had big players coming out saying this AI is real. The hype is real. So I'm not saying that's false. It's cool. It's whatever. It's marketing, but definitely big players are the ones who pushed up the AI hype. These are very smart people who are invested into AI.
Nevertheless, if you take a look underneath the hood, this move is from a few mega cap companies rebounding.
Not true. This move is not from a few mega cap companies. Caterpillar all-time highs, McDonald's all-time highs, Monster Energy all-time highs. There's a bunch of Dow companies hitting all-time highs. Amazon, Apple, Google, Facebook, Tesla, Netflix, Meta. They've all moved up a lot, but it is not 5 companies. It's more like 25. And either way, that breadth thing is just kind of like, well, of course, somebody's going to lead out of the bear market. Somebody's going to lead out of it because we're not getting we're not getting the overall central bank starting to flip yet. They haven't started QE. QE would launch everything off. Instead, it is a rally by fundamentals, by solving the inflation / productivity issues. So it is not 5 stocks. It's more than 5 stocks pushing this rally higher.
For 2022 performance. And you also have the federal government stimulating the economy before an election year, which basically
that is true.
Canceled out any type of restrictive central bank monetary policies, such as high interest rates and quantitative tightening.
And I do agree with him there. Yes, the fiscal policy has actually canceled out, or how did I put it? pretty much has made up for the tightening. It's QT. So I agree with him there. That is true.
But a few key data points that you should be paying attention to include bullish sentiment being at November 2021 peak levels.
Okay, well, AII bullish sentiment, I don't know how accurate that is because in general, in reality, S&P 500 net negative positioning was at the highest, was at the lowest record that we've seen, meaning there was more people short S&P 500 than has been in the last 20 or 30 years. And we've shown that chart multiple times. It's in my macro newsletter if you want to check it out. So bullish sentiment just started to become a little more bullish. People are still negative, by the way. Negative sentiment. So there's a bunch of sentiment measurements. Yes, people are coming more greedy, more bullish, but from 2022 till now, we are still negative. People are still more negative. So I don't agree with that.
Core inflation remaining relatively unchanged. Consumer credit card delinquencies are rising at the fastest pace.
True. Core inflation is, I don't want to say it's unchanged. It is falling. And what he misses about core inflation, the shelter is lagging. Shelter is holding up core inflation and real-time rents are lower. That's why we saw the Fed is actually revising their economic or their conditions. What is it? Financial conditions. They're going to remeasure it with using Zillow. They're going to we talked about this yesterday. They're going to use Zillow rents to gauge expectations because shelter just lags too far. So I don't agree with core inflation is non-changed. Consumer credit card delinquency is rising. True. Fastest pace ever? Probably true. Yeah.
Housing affordability is incredibly low. Manufacturing data is in straight up crash mode.
Okay, now the manufacturing data, this one's key, right? Manufacturing is key here. The thing about manufacturing, yes, it has been declining, but it went from 46.9, I believe, to 46. So it is starting to slow down, but we just saw new orders start to pick up. So maybe he made this video before the actual ISM manufacturing PMI came out. But the new orders ticked up month over month from May, June. Yeah, from May to June, new orders picked up. Inventories dropped. There's demand coming in. Prices paid went down. So I think actual manufacturing is starting to rebound, given the fiscal policy that he mentioned earlier, which is the onshoring of manufacturing productivity into America out of China or out of other places. So the manufacturing may start to actually bottom here.
Fed still isn't pivoting. Just look at the 2-year yields. And speaking of yields, the yield curve just inverted to a new low this week, which we haven't seen since 1981.
Okay, now the yield curve, right? The yield curve, even the guy who actually made the yield curve said it could be given false signals because the yield curve signals credit risk. That's what it's there. It's signaling credit risk. And we did have credit risk. The regional banks fell apart, right? And what happened? The Fed stepped in. So he hasn't really acknowledged BTFP, which is Bank Term Funding Program. That pretty much provided liquidity for the yield curve. Something did break. Keep that in mind. Something did break, and the Fed stepped in. So he's missing that point.
I mentioned we also had the second largest set of bank failures in history this year. And since more and more people are figuring out that they can park their money at a 4% money market fund instead of leaving it in their bank account, the smaller banks who support the majority of small businesses in this country are freaking out because the reserves keep draining. I'm sure we haven't seen the end of bank failures in 2023.
And I actually agree with him. Yes, we haven't seen the end of bank failures in 2023, but he's missing the response. The response was QE. The response was more bank, QE, more bank term funding program. So where is the mention that, yes, banks did fail. Yes, something broke. And guess what? The Fed pumped 450 billion into those deposits. So we can't just discount that fact. So what does that tell you in the future if something breaks again? More bank term funding program.
This divergence between the market price action and the macro data tells me that everyone is betting that the economy is going to go back to normal and that high inflation doesn't matter anymore.
Okay, also, here's the thing, bro. He focused on core inflation. Okay, you focus on a small core, so you're not focusing on energy, which most people actually see as inflationary. They look at the gas pumps, that's what triggers them to freak out. They look at food prices, that's what triggers them to freak out. Well, guess what? Headline CPI has cut in half from 9.1 to 4%, and we might even get 3.1% tomorrow. So he only focused on core. He didn't focus on headline, which sort of. It's like, hey, you focus one. I do that too. Sometimes I'll just focus on headline, but for the most part, inflation is falling. You can't just say inflation has made no progress, right?
Is clearly saying the opposite. Now, looking back in history, the last several bear markets going all the way back to the Great Depression averaged around negative 50% from their peak.
Okay, this is a big one. So he's focusing on the average bear market is 50%. I didn't even let him finish. Should I let him finish? I don't want him to. This because if I have to rewind, it's going to restart the video. So let me just address this. He's basically saying the average decline is 50%. The average drawdown, not true. He's looking at 2008, .com, 1973, 1937, and the Great Depression. He's missing a whole other. He's missing the 1991 savings and loan crisis. He's missing a couple in the 80s. So he's really not. He's being selective with his data here. These are not all the bear markets. He's selecting data and saying we should see a 50% retracement, which. Even that 2008 57% retracement during the great financial crisis, we actually exceeded the market cap drawdown from that. We exceeded that drawdown. So the details show you that we actually drew down more than the GFC, even though it was only 27%, right? Because the bond market also sold off, not just the stock market. Bond sold off, crypto sold off, and the big tech sold off, which margin debt reduced. I made that video yesterday. Margin debt is negative year over year, meaning people are not leveraging up. So despite that, which here is despite that, oh, he did make this 3 days ago. So yeah, I gotta definitely, I don't know, who knows, maybe I'll post this on TikTok, but there is more than just this, and I'll pull those up. All right, let's keep going here.
And the SPY today has only drawn down negative 28% from its peak. And you think the bear market is over? In my opinion, the halftime break is almost up and the bear market game is about to continue. This market rally has made me even more bearish, and I'm sure the second half of this year will be pretty interesting. Now, after taking some time off to spend with my fiance.
All right, so yeah, that's about it. Anyways, I just wanted to respond to that. I want to respond to that guy. Smart dude. Kind of the same bearish stuff that we see all the time. When we look into the macro, the micro, or the actual sub data, we see that yes, PMIs are negative, but the data suggests we're going to start turning back up because of the fiscal policy, and inflation is making progress, right? Not once did I hear him mention that inflation has dropped at the longest pace we've ever seen, like 10 months in a row. It's been dropping, and we are dropped in half, and we're still making progress. And that is the biggest risk to the market, has been inflation. So he didn't mention that at all. Not that he's talking his book, but he probably just believes we're going to roll over again. Because a lot of people are kind of like, oh my gosh, why are we still going up? We should be dropping by now. So it makes sense. I just want to address that. Anyways, let's get back to this other one. Oh shoot, I should have took this off. My bad. That kind of answers your question there, right? Now let's go to here. I want to go to this. Oh, you can't even see that. Okay. See. It's Morgan Stanley. Not Morgan Stanley. This is JP Morgan analyst here. This is the soft landing. Apple bringing down everything. Okay. All right, let's hear this guy.
Okay. On Friday, we get some earnings. We won't talk about your bank specifically, of course, for obvious reasons. What are you expecting this earnings season from the banks, from big tech, and can this rally broaden out?
John, so it's going to look better than it did in March. I think there were so many head fakes and noise at the end of the first quarter that even the Fed got faked out on, right? They expected us to be in recession by now. There were a lot of people saying that by July and September, the Fed could be easing. And as you said, right, this is a year where the narrative changes every single week, and that's true. John,
Yeah, it's very confusing. It is very confusing. I know I'm not letting the guy talk, but remember how that last dude said that growth is slowing faster? Well, no, the expectation that growth would collapse and the Fed would have to cut rates in the second half, which would be bearish in the short term until we got those rate cuts. But the reason why rates are still rising is literally because the economy is stronger than expected. So the expectation for inflation should be stickier, which we have seen for core, but not headline. Headline is not sticky. Energy is not sticky. Neither is food. Shelter is sticky. But now that real shelter is coming down. So
we have dropped our recession probability from 40% in March to 25% now. We are pretty highly convicted that we're in the midst of a soft landing. So what does a soft landing look like? It means that the economy can continue to grow and avoid recession, and that's why we dropped our probability. The second piece is employment stays strong. And I think that's been the signal all along. Like, there have been people like, we're going to recession, we're going to recession. You need this labor market to crack. And that has been very, very resilient over time. And the third piece is the easing has to get pushed out. And that, I think, was one of the biggest misses this year, was that there was so much easing priced into the back half of the year that had to go along with the crisis. You had to be long a crisis if you believed in easing in the back half of this year. Now, the deflation trajectory flattens out. That's certainly the case, which is why the easy is being priced out. You heard Mary Daly last night, 2 more hikes. I think that's appropriate. They're probably going to do 1 more hike than they're comfortable with, because we're nowhere near our target of 2% core inflation. But it is an awesome time to be a multi-asset investor. We were up 10% in the first 6 months of this year in a balanced fund. Nobody's talking about that. Everybody's talking about NVIDIA. I think the balanced fund up 10% is really exciting as well, and certainly more than that 3-month T-bill. That's at 5%. That's been my nemesis all year, and there's way too many people.
I love your research on the concision of it at the end. You say, do this, do this, do this. But the Phil Camparelli idea here is you got to be in the market.
Yes.
I want you to talk right now to people who are scared stiff. What's the level of fear out in the street? Because don't you have to go up with a wall of worry?
Yeah. So, and we've heard it all year. We've heard debt ceiling. We've heard regional bank crisis. It was a foregone conclusion that there was going to be a recession this year, Tom. And I'm not talking people to get out of cash and go into equities. That's not what I'm saying. I'm saying when you're making a bet on a balanced, diversified portfolio, which, by the way, has worked over so many years, you're not making a bet on stocks or bonds. You're making a bet on the relationship between those two asset classes, which was absolutely inverted last year. Last year was the first year since 1974 that both stocks and bonds went down in the same year. And I came on this show and told you, you know what, we have the best forecasted return for the 60-40 that we've had since 2010 coming into this year. So, Tom, those are the folks that I'm after. They're sitting there in the 3-month T-bill. It's like the best hedge fund out there, right, at 5+%. And they're saying, I'm safe here. Well, you know what, if the balance fund's up 10%.
well, you heard it. Soft landing. Morgan Stanley. I'm not saying he's right, but I agree with him because everybody was expecting a crash. Didn't happen. We're starting to rebounce. We're starting to bounce here. Okay. Now, getting back to, I should just keep this YouTube channel up in case I have, it's not up, but I'm going to use this one separate in the future. I'll take it off for now. We'll get back to the market. So I got a comment here. Fueler 400. Any thoughts on recently announced NASDAQ rebalancing act being invoked on tech stocks? I don't even know what that is, to be honest with you. So, let me see. Yeah, I don't know what that is, bro.
Stupid.
Not you, me. I don't even know what that is. So let me try to see if I could find it as we move on here. So you said NASDAQ rebalancing act. Let's get those charts up there. So we're starting to rebound a little bit. Here we go. Do have NIO up here. So yeah, on the recent announcement of NASDAQ Rebalancing Act, what is the NASDAQ Rebalancing Act? What is that? NASDAQ Rebalancing Act. Oh shoot, I didn't know I had this up. I need to take that off. It's probably slowing my computer. I mean, it sounds like nothing. It sounds like nothing. So market dip ahead of NASDAQ rebalance, the NASDAQ 100 rebalancing. All right, let's check this out. So Wall Street's most valuable stocks declined after the Nasdaq said late Friday, so this was last week, I guess, it would carry special rebalancing of the index to address over concentration in the index by redistributing weights. The adjustment will be based on shares outstanding of July 3rd, with changes announced on July 14th and taking effect before market opens July 24th. So, okay, so we still got a week or two before that happens. NASDAQ 100 includes 100 of the largest companies that trade on the NASDAQ exchange, and changes to the index will force investment funds to track to adjustment for blah, blah, blah. Okay, Wall Street's most valuable companies amongst the winners, U.S. stock market, blah, blah, blah. It looks like they're just going to rebound. I think like NVIDIA, some of these stocks may have just got way too heavily weighted. I think it doesn't matter. I think it's just noise. Yeah, I think it's just noise in the short run, right? What they gonna do? You know, maybe they take Apple out, right? Does Apple get moved down? Like, I think that's all it is. I don't see nothing too crazy here. Yeah, just NASDAQ rebalancing. I think it's a nothing burger. Oh, what up, Ace? What's going on, Ace? Shout out to Ace. Get that shout out. There we go. It's not on repeat. Good. Anyways, yeah, that was that response. So yeah, I don't think so, bro. I don't think the rebalancing really matters. I don't think it matters. Maybe for a day trade, you know, but you know, macro or in the big picture, it's nothing. In the big picture, it doesn't mean much, in my view. Looking at Twitter here to see if we're missing anything. As we have, let's see, 906 a session. So Ace, if you did miss, if you have the newsletter, you probably got the news. S&P 500 guidance, reported guidance higher is starting to positive guidance versus negative guidance is moving up. So basically, running into this earnings season, we're seeing 103 companies have reported their pre-reported guidance higher than it was the last quarter. And then also the negative guidance is actually falling, which tells us that earnings are bottoming. That's the earnings bottoming signal. It doesn't mean they are bottoming, they have to bottom, but we are getting that signal. Okay, so that is the earnings bottoming signal in my view. Look at the Dow just exploding. Dow making new high of day, DIA. Let's look at the Dow starting to move up. We got a lot of market breadth. We're just looking at this. Neo, this is if you like to trade, this is a nice little wedge setup against VWAP, right? Look at that. Look at that setup for Neo there. All right. I wonder if there is any historical data on a rebalance that we can gain from. Maybe there is. There probably is some rebalancing, but it's just so complicated. There's a bunch of indexes. There probably is historical data rebalancing. I don't think it matters personally. I don't think it makes a big difference in the long term, maybe the short term. Maybe it's just like they need to get rid of a couple companies in the NASDAQ that are just not performing, and maybe they voted on it, and then there's some that they need to decrease the weight and increase the weights, right? I also hear, that's a little different, getting Palantir into the S&P 500, but they need to show positive earnings for I think 3 or 4 quarters in a row before that actually happens. Health of the rotation risks. Okay. Here's some tech concentration. Okay. All right, cool. All right. Bank of America got caught charging illegal fees and opening credit and card accounts without customer consent. Dang, they're always doing that. How is that always the case? And they're moving higher. That's crazy. Nice wedge pattern. Look at that. Bank of America. Let's see if I could do this. Ah, didn't do it. Yeah, BAC. Guess nobody cared. Slap on the wrist. Penalized for charging junk fees, opening fake account. How could they just open fake accounts? That's great. That's why, hey, that's why we're pro crypto. That's why crypto's going higher. By the way, shout out to that TikTok guy. He's a crypto guy too. It's just the macro we disagree with, right? Overall, we're all on the same page here. What do I think about Tesla? Let's see. What do I think about Tesla? Gosh, I got itchy all of a sudden. Is that grass coming in here? Here's what I think about Tesla. I think Tesla needs to consolidate a little bit. Obviously, we have earnings coming up. And I think people are a little nervous about earnings. And I think Tesla can muddle around a little bit in the next couple of days. I think Tesla's going to be flat. I think Tesla just remains flat until earnings come out. And then when the earnings actually come out, then we're going to see a big movement either up or down. We're looking for margins to bottom. We're looking for better guidance. And then when the earnings call starts, then we'll get the confirmation, right? We'll get that confirmation on the actual earnings call. So other than that, hey, Tesla can come back and fill the gap at 261, 262-ish, right? Maybe from 260, I guess that support is around 263. So I would say between 264 and 263, comes back down, fills that gap. Maybe it goes lower. Maybe it goes down to 257. But I think it just muddles around until we get the earnings report in a couple weeks, right? Unless the inflation report is really good tomorrow and Thursday. If we get really good inflation report and the overall index like QQQ, the Qs, the NASDAQ starts to rip up and the SPY starts to rip up, then Tesla catches another leg and I think it moves right back to 282. Those are my thoughts on Tesla. Goes to 282. If the inflation report is better than expected, the macro improves. If it doesn't, Tesla muddles around, gets to 261, 260, maybe 257 until earnings come out. That's what I think. That's my view on Tesla. Good afternoon, William. What up? ETH, thank you. William, okay, yeah, I'll take a look at ETH. RMBL, no risk. It is no biscuit. Yeah, no biscuit for no risk. Yo, Mr. Fielder, making some improvements at the gym. Hey, that's what's up. Shout out to you, bro. Keep working out. Keep your mindset. Track your data. Track your weight. Remember, we have fitness lives on Saturday, 7 p.m. Eastern time, which would be 4 p.m. Arizona time, Phoenix time. So maybe you should get some tips on there. But shout out to you. Keep improving, bro. Keep it up. Oh, dang. I missed all these. Because SPY dumped this morning. It's ripping now. Should have held all morning till now. 9:39. It's tough to trade SPY. I don't like trading in this environment. The S&P, like, here's your best bet for S&P. And just not to lose money, or at least to get some more clarity. Hey, we've seen, and you guys, we've showed this pattern so many times. If you're here on YouTube, look, S&P sells off, finds support at previous day levels, breaks out, gets above VWAP. So you get this level start to break. You get above VWAP, it holds VWAP, and it pushes higher, makes a new high of day. William, if you guys ever want coaching, book a call with me. Link in the bio. Well, not link in the bio, but can I say that on here? Just book a call with me on the website, and we can go through your trading live. Well, we could do live, but we could go through and I can coach you up on the trading. I might not be trading myself, but I still can help you to improve on your trading. All right. So what were we looking at here? ETH. That's right. Ethereum. Oh, shoot. Where's the music? Yeah, let me get that back on. Can we hear it now? At the end of the day, Tesla, man, this is going to be a very explosive earnings report. Are we at it might have ran up expecting margins to bottom. We might have ran up on that. We did sell off in the last earnings report, and then so we'll see. Maybe we sell off back to 241. Either way, rest of the year, I see the macro improving, and that trickles into Tesla. So Ethereum, like you said, so ETH has a lot of upgrades, bro. ETH is deflationary too. Who is this? William. ETH is deflationary. Have to go to work. All right, cool. We'll catch you later, William. ETH is deflationary. The macro cycle is turning up. Price is trying to break out. Bitcoin, like Ethereum is set to explode, man. There's just so many good things happening. We'll have to do a whole stream on ETH. Maybe we'll do that. We'll schedule a whole stream just talking about Ethereum upgrades, and the prospects. Can it outpace Bitcoin in the next cycle? I think so. Yeah, good to see you guys though. All right, so yeah, that's what we got there. Tesla on the macro, it's still a little shaky. And Zoom definitely, let's see what the Zoom moving averages look like. Is this trade starting to play out? Hey, we're pushing that level. 69, we're pushing that level. So once Zoom starts to break out, it's above the 50, it's above the 100. Can we hold? We haven't held above the 50-day moving average, or my bad, we haven't held above the 100-day moving average on the daily chart for Zoom in a long time, right? We got above it for 1 day, couldn't hold. 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 It keeps leaking below. Actually, it did hold for a couple days, then it sold off. So, hey, if we get the support on Zoom, we see ARK breaking out, we see Coinbase breaking out, we see Roku breaking out. If this Zoom can hold, right? Not trying to tell people what to do, what you should do, but I see this as a very good setup. They haven't even announced their AI yet. Do I know for a fact they will do it? No, I do not. I expect it to happen, though. I expect them to announce their AI. So just keep an eye on Zoom, right? Very good option chain. Long options. And this thing was at, remember, this thing was at 500, right? This thing was at 500, and basically the cost to run Zoom is very low. So we get above that 200, that's going to be big. Get above the 200 daily moving average. Let's move over to the weekly chart on Zoom. So all the way back to the highs, right? That's a 750% return if we get back to the highs. Now that was a big blow off top because we were in QE, and you had the pandemic narrative. So it's not that easy to get back to the highs because we're not really in a pandemic narrative, and we're not in QE yet. But guess what? By 2024, we're going to be in QE. And if they have AI, and if the transition to more, the more digital, not digital economy, but the virtual economy, and Zoom leads that with their new AI, then I think we could get back to all-time highs and even surpass that, right? Which is why I have very, very far out leap calls. Oh, it took, oh man, come on, bro. I took it off the loop. Let me keep the loop on there. Okay, there we go. Got that going. I'm also keeping my eye on ZM. Great play. Yeah, I'm also keeping my eye on. Yes, thanks. Big man's coming. Let me see. What are some other big plays? Hey, I really do like Roku too. Look at Roku. Roku is breaking out, by the way. Roku at 490. Golly, nice. AMD, I've been waiting for the setup, but it's just taking a while. There might be too much risk in China right now for AMD. As soon as we get some resolution between Janet Yellen and the foreign ministers from China, I think we start to see NVIDIA and AMD and some of the chip makers start to make another move. All right, here's that support for AMD. That level we are pushing against. ARKK. ARK starting to get 45.50. Yeah, that's a breakout. That is a breakout above the 50-day moving average. Oops. Nice breakout there. Okay, now going back to ZM. I know I'm focused on ZM here. I'm going to keep looking at ZM. Furthest date strike is 90. How far out are your leap calls, Beezer? Let me double check. Actually, no, I don't need to look at my phone. I have it up here. I'll show you guys exactly what my leap calls are. I got them in June. So if you're on YouTube, you'll be able to see it. I am about to reveal my portfolio, one of my positions on YouTube. People often do that. Do they show their positions? So here's my position on Zoom. Okay. I'm not trying to show everything else, but just my Zoom position. And let's see if I could widen this a little bit. I have still, I'm down 500 right now. Dang, it's back to the price where I think I bought it at. Sheesh, I got ate up by that theta. Got eaten up by the theta. 4 contracts. These are, sorry, I don't memorize my strikes. These are all the same strike though. Where the heck is it? Where's the Greeks at? So I got the 75 calls. There it is. 75 calls out. Where's my expiry at? January 2017. I'm sorry, dude. What am I saying, bro? Excuse me. You know what? Let me hit the button, bro. Golly. I need to hit this button quicker. If I had the stream deck working, I would do it pretty quick. All right. Oh, no. I don't want the loop. All right. So these are January 2025 leaps, 75 strike. Yeah, 75 strikes. So I'm trying to hold this for the big move, right? I'm anticipating that we do have some turbulence in the future, but I'm anticipating what, a year from now, I think we're going to be in QE. I think 1 year from now we'll be back in QE. And when I look at the Greeks here, delta 61, gamma's not bad. Theta will eat me up a little bit, but man, Zoom can run. I think Zoom can really run. If something changes fundamentally, I'll get out of my calls. But yeah, I got 4 calls January 2025, looking pretty far out. Man, that theta ate me up. June, what is this? June, when did I buy them? June 28th. So I started getting them about a month ago. A little less than a month ago. Yeah, 3 weeks ago. I got in early though. I'm not gonna lie. I messed up. I got FOMO. I got a little bit of FOMO. So looking back at the charts. All right, let me get off of that. Looking back at the charts. What is this? Oh, this is my newsletter. Survival of the fittest, right? This is the catalyst, right? People are gonna discount this, but negative EPS falling against positive EPS. Earning estimates are starting to bottom. All right, anyways, let me get off this. Back to the charts. Yeah, so 75 level would put me right about here. Right? Once we get above this level, then I'll be in the money. I'll be in the money over the 75 level. But to break even, let's see, because really on options, you really start making money at the break even price. Break even's at 92. So to break even, it's going to have to get above right about here. Right, so I need this to work out for me. Right, so in the money, break even, and then really that's why I'm giving it so much time. Once we get above, once we start breaking above, and once you break this should actually retrace. Technically, it doesn't mean it's going to happen, but we should come back to like 175. Man, the SPY is looking bullish. How important are the Greeks? The Greeks are important, man. Theta will eat you up. What up, user 330, 335, 256, 88, 70, 02. Man, you guys, why don't you guys get some simple names so I can remember you or get a very distinctive picture? January 7th, 2025, 90 strikes, the furthest out you can get. Okay. Yeah, the Greeks are important. If you look at Teladoc, like it's really hard to explain the Greeks because it's so mathematical, but basically the delta. So if you're looking at the delta, actually, you know what? Let's do this. Let's do this. We'll look at the Greeks. I'm going to show you guys how the Greeks work. Well, as much as I know, my knowledge, right? To the extent of my knowledge, I'll show you the Greeks. All right, so let's get to that Zoom call option. Put myself on the side here. Can we even see that? Do we need to zoom in? Does it zoom in further? Oh man, I don't know if you could see it. It's kind of sketchy. Trying to get it to where we can see it the best. I guess this is as far as it goes. All right. Either way, let's look at these Greeks. So the delta, for every dollar move you get in the price, the delta adds to the contract. So my contract right now is what, $15.88 per 100 shares. Basically what you do is you add 61 cents to that contract for every dollar move. That's how I read it anyways. Okay. Now for every dollar move to the downside, the delta actually minuses on your contract also. Okay. That's the delta. That's how delta works. Maybe I'm not saying it right. There's probably people that know it better than I do, but I somewhat know how it works. Okay. Gamma for every dollar move adds to the delta move. So it's an exponential thing. Once your delta moves, then your gamma also starts to accumulate and add to the delta. So gamma is really the exponential part of the trend, not of the trend, the exponential part of the contract. The fatter the gamma, the more exponential, but it really has to make a move higher, right? Theta is time decay. This is very important to know about options. If you're selling options, time decay is in your favor. If you're buying options, it's out of your favor. So basically, I'm going to lose 1.76 cents for every day that passes. And the thing about theta is it doesn't eat you up right away. I could be wrong about every day. Theta goes exponential the closer you get to the expiry. So the closer that this gets, which is why I'm so far out, the further we get to expiry in the theta, the more the theta starts to exponentially eat up my contract, which is why I don't really want to hold this to the end of 2025. I'm really looking for the start of QE, right? The start of QE maybe in 2024, maybe in Q1, Q2, and then play this out. And I don't want to hold it till January of 2025. I probably want to get out 3 or 4 months before the theta really starts to eat me up. Okay, Vega is a reflection of the volatility on your contract. I don't know how to say this correctly, right? I'm not the best expert on explaining it, but it's in my head. You know, maybe I got to get better at it. Rho is RHO. I don't even know how to pronounce that. Has to do with interest rates. It's really irrelevant at this point. So the most important thing is theta, delta, gamma, right? Where's your expiry, implied volatility, blah, blah, blah. So what I'm saying is if you go to the Teladoc options, the gamma is insane. The gamma is like 0.11. Gamma is crazy. Gamma really pumps your contract if you get a big move. So once I get into break even, then that's where the exponential value really starts to kick in. Once we get to that, do we have any questions here? Election year. Yes, we're in an election year also. Oh man, looks like we lost the camera. Why is that the case, dude? This thing lasted like much longer in the past. All right, I'm gonna have to switch my camera up. Uh-oh, you're gonna get that side view. Uh-oh. Yeah, I've been hitting the arms a little bit. All right, can you even see that? I guess you can a little bit. All right, so yeah, that's what we're looking at here. I don't know if we have any questions on that before I turn back to the actual screen here. Ooh, big drop on S&P. What just hit the tape? What hit the tape? Oops, wrong window. Something must have hit the tape. Q's selling off, Dow sold off, VIX sort of spiked. See what came into the news really quick. U.S. Energy Information. Q4 and Q4 of 2023. So oil, they're expecting oil to go up. It is a risk to the market. If U.S. cluster bomb used in Ukraine, Russia's army will be forced to use similar methods. Maybe this is geopolitical risk, but this looked like this happened earlier. I don't think this is what's going on right now. Let me look on Twitter to see if something hit the market. 65. Yeah, you were telling me about Zoom before. I didn't even realize that. Must have been back in the day, huh? Yeah, people need, yeah, 100%. Big man's coming. That's what I'm looking at. I also have Tesla calls, but Tesla's really tricky. Tesla's really tricky. I don't think it's really safe for a lot of people. Because I don't know what they're actually going to do. I could show you my Tesla positions if you want. Yeah, Zoom. I like Zoom though. Zoom's looking pretty solid right now. Man, I did like AMD, but it just can't hold. AMD just can't hold. It's when it does come back, it's gonna be nice. Thanks, Brian Zerb. Trying to hit that gym. Actually, I love the gym. The gym is my therapy. Okay, I got to keep it real. The gym is my therapy. That's where I get. You know, I don't have a therapist. Maybe people should have a therapist, but you know, who knows how politically compromised therapists are in this day. By the way, I got my master's degree in literally the family marriage therapy. And trust me, I am a Bible guy, right? I'm a Bible guy. I'm a Christian, right? Christ is king, as you've heard. But, you know, a lot of the stuff when it came to counseling was bullcrap. I was like, heck no, I'm not talking about that. Or I can't mention that. So I just didn't like it. I got into, you know, I worked with kids instead. So I'd rather go to the gym than listen to some bullcrap activists try to tell me how not to be a man. Oh, now that what are they doing now? They're canceling you for working out. Aren't they doing that on? That's insane. Isn't that insane? I saw Joe Rogan talking about that. They're canceling people for working out at the gym, for loving the gym. That's insane, bro. Now, to say what I really want to say, I'll probably get banned on TikTok, so I'm not going to say it. But for the most part, that's ridiculous. That's ridiculous. One of these days, man, I'll say what I really want to say about it. But I keep getting banned on TikTok. So, and hey, I don't have a big enough subscriber count or enough clout. The algorithm already doesn't really like me on YouTube, so I gotta be careful somewhat. When I get big, if I ever get big, then I'll say what I have to say, because I'll actually have a big audience about that crap. Because at the end of the day, we're making all this money, but does it really matter? Does it really matter other than improving and speaking the truth and spreading the truth, keeping our society stable, not taken over by these maniacs trying to brainwash kids and society? I don't think so. So I'll say what I have to say later. We get a little bigger, but that's why we have Mind Growth Platform. We're all about finance, fitness, and improvement, overall improvement. No victimhood here. Nobody's a victim, only in your own head. I don't even know if you could say that word on some of these platforms. Who knows? Guess we'll find out. Oh, Beezer. Oh yeah, what up? Okay, that's you. That's right. So many different names back and forth, man. I'm sorry. Not the smartest guy alive. Can't remember names. I remember faces though, but I don't really see your guys' faces. Yeah, I'm not gonna get banned. Hey Yasin, I see you out there. Appreciate it, Yasin. You still trading Forex? Still looking at the Forex market, Yasin? I was supposed to look at Twitter. Let me get back to Twitter. Yeah, hopefully those Zoom calls print. It's not a bad little beat there. Maybe I should get the music up a little more. Tom Lee, what does Tom Lee got to say? What are you saying, Tom Lee? I think he's live right now. Is he live right now?
When I was at JP Morgan, they called it the random number generator report. I know it's supposed to be based on payrolls, but they just don't do seasonal adjustments right. So who knows how many jobs really got added? I think people are forgetting when people are earning 5% on Fed funds, because the Fed is putting rates here, just on money markets, that's $250 billion a year in income. You know, that's like close to 1% GDP growth, right? That's
crazy. If you're earning money in the money market funds, you're fueling economic growth. Either way, there's no way we lose here. I know everybody says deep recession. There is no, like, everything points to stronger economy. Everything points to stronger economy and a rebound. I'm not saying don't believe anything the recession people, they're lying. I'm not saying that. I'm just saying, hey, put me up against any bear marketist, any recessionists, put me up against them. Decide for yourself. Decide for yourself versus the data. Versus the data and versus the thought process of what's going on here. The real problem is, and it's hard to be bullish because people don't want to lose, right? If you're bearish and you're wrong, nobody cares. If you're bullish and you're wrong, everybody's pissed. That's why they're afraid to be bullish. But I'm putting my neck out on the line. Not that like I have all these followers anyway, but I'm putting my neck out on the line just saying, hey, you know what? We're in a bull market. We're going higher. I see it. There's nothing else the Fed. There is no choice but the government to keep creating more debt. And that pushes up risk assets. Inflation is making progress and they are not going to risk going into a deep recession, maybe a mild recession, but they will save the day. People happen to just forget the fact that the last two recessions were pumped. The last two recessions recovered really quick. The last two times the Fed cut rates, the market went higher. They always just focus on, oh, the market, when you cut rates, the market goes lower. 2020. Yes, that was a pandemic. I know it was out of the norm, but they cut rates, market went higher, right? The QE, market went higher. Okay, how about 2018 December? I remember I was holding Facebook, crying in my face because I was down 80%. And I was like, oh my gosh, I'm getting crushed here. I don't even want to get a haircut. I don't even care what I look like because I am down so much money and I'm a new investor. I was getting smashed. And all of a sudden the Fed came out and said, okay, we are going to stop QT, and QE, boom, everything went higher. So what are you talking about? They cut rates. That is not, like, it doesn't mean they cut rates, market goes higher. That's not the correlation. The correlation is what else is going on. What is the earnings backdrop? Everybody's negative. Positioning is negative. We're going higher if those people are wrong. And inflation is the biggest signal there, right? Inflation is the biggest signal there. And guess what? I think inflation's going to print tomorrow very low. We're going to be live, by the way. Maybe I come on a little earlier or just stick to my time. You know, say what you say, mean what you say. So I'll just come on the regular time. But I think inflation goes lower. We'll see. I honestly have a hard time I have to get a lot of sleep. I know some people run off like 6 hours of sleep. I need a lot of sleep. I don't know if it's muscle. What do you think, Beezer? Is it muscle when you have more muscle? That you have to sleep more? But when I work out, I have this Whoop strap. It tells me, my recovery. And when I do work out, it takes more for me to recover. It's actually really hard for me to recover. So I need more sleep. If I lived in the East Coast, then I wouldn't have to worry. I could get up earlier. I could be market open, but I got to get my brain together. I got to get more sleep. And you could say go to sleep earlier, but I live in Phoenix. It's hard to go to sleep. I don't want to be pumping melatonin in my veins just to fall asleep because the sun's up till what, 6 o'clock, 7 o'clock, 7:30. So whatever. All right, so what do we got here? I am a subscriber here. I do have to pay for the newsletter things. Trading Forex did trade gold short today from 1936. Oh, Yassine, the newsletter, Yassine, is free. The newsletter is free. I have a paid newsletter, and that's mostly, like, I guess I'll just say it now, that's to support me. If you want to do the paid version for the newsletter, you're just supporting me as a content creator, and in the future you're gonna get perks, right? But for now, the newsletter is free. Just go to the website. Some things on the site aren't free, that's why I'm asking. Oh, okay, yeah, exactly. You'll just be supporting me. Hey, if you guys want to support me, you know, would help me out. I did just lose my home. No, I'm just playing. But yeah, if you want to support me, that'll be great. Keep me motivated for sure. And then ask me specialized questions. I'm still, you know, trying to figure out how to build the site a little better too. Me and my brother. He's the engineer behind it. He's in the comments. He's Isaiah Fielder. Obviously, I'm Jay Fielder, Jeremy Fielder. He's Isaiah Fielder. He's a technologist. He's 10 times smarter than me. He's a software engineer. I'm just the guy that takes risks and hopes for the best. Anyways, we're looking over here stuck on ZM for like an hour. I just wanted to see if he had anything. Open Door, gold. Maybe we'll switch back. Oh yeah, what was going on here? What was this? Why did the market pull back? Breaking news. Anybody know why the market pulled back so strong? In survey in 2022, the proportion of traditional hedge funds investing in crypto assets falls to 29% versus 37% in 2022 survey. Okay, 2022, who cares? Russian central bank to start piloting a digital ruble on real customers in August. Let's go, crypto. A digital ruble. Okay, that means you're gonna have to tokenize your currency. That means you're gonna need an oracle and a blockchain. You don't need it, but it still points to the, you know, points to blockchain at the end of the day. We'll see. We're still early. Still very extremely early. Indonesia seizes Iran flag supertanker. I wonder if that's what it was. Indonesia seizes Iran flag supertanker over sanctions, busting oil transfer. Dang, no way. Indonesia stepping in to block. That might actually push oil higher though. That might push oil higher. Let's see. What is oil looking like? Oops. What are we looking like here on oil? Is oil moving up? Shoot. Uh-oh, oil is pushing up. As a matter of fact, oil just made a big move up. It's at 75. So, hey, be careful there. Pack of lettuce, right? If that oil supply starts to drop, oil starts to break out. This is what I don't want to see. I'm looking on a different chart here. Definitely don't want to see oil break out. Maybe that was the risk, geopolitical risk. I'm not sure. Time CPI. Do you know the difference? How come we have two types of CPI? Yes, we have a lot of types of CPI. Oh, okay. We got some comments here. Let me throw this up here. Hassan, and I'm going to answer Yassine's. So Yassine, yeah, we have CPI, consumer price index, includes energy and food. Pretty much the benchmark is CPI. All of a sudden this year it's all about core. But you have core CPI month over month, and then you have the year over year reading. Month over month just tells you what's going on. Literally, it's like micro data. Year over year tells you the trend, the macro trend. The trend is lower. And then you have core CPI, which takes out energy and food and focuses on mainly shelter and services. That is a little stickier. It is coming down, but it is a little stickier. Thursday is PPI, producer price index, or producer prices. PPI leads CPI because it is the prices for producers. So if we're looking at the economy, producer prices don't matter as much. CPI matters more because consumers literally are, you know, CPI reflects the consumer. what they have to deal with, but PPI reflects the businesses. So the better we get the PPI, which is falling like a rock. PPI, by the way, was at 11%. Oh, that's old news. Okay. So CPI falls. Let's say CPI falls. Not CPI. PPI was higher than CPI, and PPI or producer prices fell way faster, which I think is a very big tailwind for US equities because their prices to run their businesses are lower. Therefore, earnings picture improves to some degree. So yeah, that's the difference there. Producer prices versus consumer prices, if that's what your question is. I actually have a post. If you look at the business cycle, it's called The Business Cycle, and it actually goes through that. The Business Cycle post. Let's see. Okay, it's not okay. I guess I don't have it on here, but yeah, let me I have the whole business cycle kind of drawn out. Where's the search tab at? There we go. Business cycle. Business cycle. There it is. All right. Let's go to this really quick. We're on YouTube, but I'm going to show you guys. Maybe you'll go give me a follow. So this is the website, right? Even though it shouldn't look like this, but this is the website. This I just typed in right here in the search bar, The Business Cycle. This might actually be the most read article that I've written. I wrote this 2 years ago when I first started learning the business cycle. And if we zoom in here, basically you have the whole business cycle, GDP growth. Here's what it says: reading the business cycle to investors, what matters? It's not the absolute value of the data point, but the market's expectation in reaction to that data point. So it's not what exactly is CPI, it is what is the expectation and how does the market react to that survey. Okay, surveys are typically leading indicators because they're expectations, while hard data is generally lagging indicators. Surveys are sentiment measured, while hard data is factual. You probably don't care about that. Anyways, GDP growth, business growth, the supply side, ISM, you hear me talk about that, vehicles, blah, blah, blah. I'm going to get to personal consumer growth, retail sales, personal consumption, personal income, personal savings. Who's that? Labor market growth, ADP, private payrolls, non-farm payrolls, unemployment rate, blah, blah, blah. Where's inflation? Because this is where, Yassine, what you need to come look at. Consumer inflation. Consumer inflation reflects the conditions of inflation on consumers. You got CPI. You got the CPI data, which is kind of dumb. I should probably take that off. Inflation rate, because it's really the rate of inflation. Gasoline prices, average house prices. That's part of inflation too. Then you got producer inflation, which is PPI, the PPI data. I could actually add core in here. I'm gonna have to redo this. I'm gonna have to add some stuff in here. This is when I didn't really know the business cycle that great back then. Now I know it like a T. It's like the back of my hand. I know the business cycle. Like I had to learn this, by the way. I don't know everything like most people who are economists. I learn as much as I can. Technicals, fundamentals, whatever. And so I'm ready. I'm strapped. I'm strapped with info. Let's go. All right, back to the charts. So yeah, go check that out. Business cycle. Go support me. Subscribe to the newsletter if you're not already subscribed. Pump my ego a little bit. All right, so here we go. Have you guys tried to write Python code using ChatGPT to use algorithm trade? I have not tried that. That sounds very, shoot, that sounds like too much for me. Oh, for my brother. Okay. You hear that, Isaiah? I don't know if he's still on the stream. But ChatGPT, yeah, he'll answer all your questions. I don't know if you can at him, but yeah, he'll definitely answer those questions. So this is the second time Indonesia went after the tanker. Iran was smuggling oil against sanctions. You know what's funny? I actually don't care. I'd rather have Iran do the oil because they're selling it so cheap. If the sanctions go through, if we like, just think about it for the marketing. I'm selfish, right? I want the market to go higher. If they smuggle cheap oil, the oil prices go lower, inflation disappears. If they stop the production or stop that supply from coming over, oil prices go higher, puts more stress on the market. But you know, the sanctions, I mean, do they work? I don't think they're going to work anyway. We need the price of oil lower. But it's old news, like you said. All right, let me get back to this. $9.49. Hey, maybe AMD is starting to bottom here. That's a nice little setup. AMD has pretty clean setups. S&P is starting to grind higher. Got some Josh Brown. Rotation risks. I like Josh Brown. Oh, this is Wells Fargo. Okay. The upcoming NDX rebalancing is. Oh, here's to answer your question. Who's asking about the rebalancing? This is actually somebody, Chris Harvey. He's bearish on the market though, so keep that in mind while he talks. All right, so Chris Harvey, he's bearish on the market. He actually increased his price target. I remember this guy. He was like 3,500, then he moved it up to 3,800 for the bears. The upcoming NDX rebalance is reducing concentration risk, but creating Uber cap selling pressure. Okay, with Uber caps overbought near term, liquidity demands will likely weigh on the group. So he's basically saying the rebalancing is bearish. Okay, cool. See if that's actually true. You guys want to hear him? I see you, big man. And D Maj. Appreciate the support. Oh, okay. Multiple expansion forward PU earnings 35. Whatever. Oh, yes, I am playing some. Oh, you guys can't hear it. Ah, damn it. Now I know why. You can't hear it because I didn't share the screen. All right, yeah, let's do the sharing. I'm gonna lose some viewers here. Oh, she just punked him. Hold up a sec. Yeah, but she's right. The small caps are perking up, as she says, as she uses Dow perking up. Industrials, energy, blah blah blah, doing better. I'm here to see what Mr. Josh Brown says. Right, GDP now just they revised up GDP growth, like that deflects or that kind of erases all the bear narratives that the economy is slowing down. Why is the Atlanta GDP, who is part of the Fed's well, actually, I don't know this for a fact, so I'm just kind of speaking out of my you know what, but I'm guessing the Atlanta GDP or the Atlanta Fed, or who is it, Atlanta GDP now, has something to do with the Fed, and maybe we'll hear that in the next meeting. But they're revising growth up, and so are earnings. So like, I don't know, it's just, you think these guys are going to be wrong. You still can't hear? What? YouTube, you guys can't hear that? No way.
About that we're in a recession. We're not in a recession. And the reason why is all point.
Bro, what, dude, are you kidding me? You know what? Maybe it's, let me see. No. Okay. Dang. I'm sorry. I'm over here trying to play it. Maybe I have to turn this off. How about this? Tell me if you guys can hear this.
To last week, all of that job data that we got, non-farm payrolls, ADP, Challenger Gray, across the board. And that is leading to higher wages, and that is leading to a consumer that is resilient. And that is why housing and auto have done well, and services has done well.
Yeah.
And see, I will just tie this back to earnings. Actually,
okay.
Better than expected because the economy.
All right, my bad, stupid. Here, let me hit the. Oh, I can't do it. Stupid. Okay, so now I know what it is. I got it fixed. If I have the background music on, it won't play this music. I thought it would do it at the same time because I can hear it. So now I know I got to pause that, which is why I need the damn Stream Deck to work, bro. So I don't have to go clicking. Oh, it pisses me off. I don't want to go get a Microsoft. I don't want to deal with that crap again. As a matter of fact, I need to cancel on my subscription. I'm not even using that stupid thing. All right. Here we go. Now we can hear.
So let me just note too that let's put the Dow back up, guys, please. Highs of the day, as you see, near 240. Microsoft is now green. It was in the red, but you heard David Faber just talking that they may try and close this deal as soon as Monday, according to him. Of course, they get this big win versus the FTC today. Microsoft, remember the Dow, stock now higher. Highs of the day, some of the names within there. 3M, we're going to talk about industrials coming up a little bit later. But Jimmy, as I throw it to you, and by the way, Activision's up like 10% on this development as well. You own Microsoft, and just how you're thinking about tech in the here and now.
Yeah, well, I like Steph. I own it underweight, pretty much around 18%. That's interesting. But I think what we have to look for, whether it's Microsoft, Apple, or any of these tech heavyweights, is what if through the rest of this year they return 5-7%? Right? That actually, for any stock in a 6-month period, would be fabulous, but it will feel like a big disappointment. Now, I honestly think that is potentially the possibility.
Oh, shoot. So Max P said he could hear both at the same time. It probably, I'm guessing it's, man, that is so, see, those are the audio things that really piss me off. Some people hear it, some people don't. By the way, ZM starting to break out. Let's go. Over 70. Let's go. What a recovery. Coinbase starting to fall out a little bit. ARK must be moving. Either way, now I know to make it clear for the crowd, we got to do this.
Just given the enormous gains that they've had, how much is priced in, and I'm not saying they're not worth their current valuation. I'm just saying it's hard to say, well, what comes next? Where's the next catalyst that comes from? In the meantime, I do see the potential for better returns in the non-tech names, the more cyclical stocks. And this is where I wanted to just back up what Steph was saying, is that it does seem to me there was a seminal moment June 2nd of this year, just a little over a month ago, where we got the May labor report. And that was the first time that the market said, wait a second, this regional banking crisis may not tip the economy into a recession. That's been sequentially buoyed by a number of reports over the last 5 weeks, during which time the equal weight S&P 500 has a 7.5% return through today, whereas the NASDAQ and the S&P 500 market cap weight, oddly enough, have the same exact return of 4.9%. Now, that's, those numbers are small, but there is outperformance. And I think we should get used to, once again, that if you had 5-7% over a 6-month period as a return, that actually would be really good. Let's not get too used to 100-200% returns in 6 months.
See, I also wonder, Josh, if as you look at the way the market.
Bro, we got Ricky Bobby in the chat. That's funny. It reminds me of that show, Ricky Bobby. What up, Ricky Bobby? So yeah, S&P equal weight, pretty strong.
Market's reacting in some respects, perhaps to this Microsoft news, whether we just have a more open market, so to speak. More IPOs start coming down the pike. The M&A environment isn't as closed off, or one case and one win versus the FTC doesn't a new market make for deals. It's still an administration that is obviously set against a broad environment of deal making. But if this is at least an indication that, look, if you got to go to court to get it done, you go to court. You do what you have to do to get a deal done. And just because the FTC doesn't want a deal to happen doesn't mean that that's necessarily the be all end all in that. So maybe you have a more open environment for some transactions.
Now, whatever. Tech's going higher. Tech will keep going higher. People are just afraid it went up too much. They want to rotate. I think it still goes higher. Just seen this play out so many times. People say FOMO. By the way, I just want to point out Zoom is starting to really break out here. Microsoft, viral videos. Are you on the YouTube? Ricky Bobby in the chat. So I know I have this up here, CNBC, but check out this breakout, right? I know I'm a little excited about it because I'm already in it, but for sure, this I got in early. So if I did have to get in again, this would have been my signal right here for Zoom. So I know I have a lot of stuff marked up on here, but this is basically the short local trend for Zoom. Let me take some of these things off here. This is the local trend for Zoom. And what I'm seeing is that the downtrend is now the downtrend is now starting to break, right? From this high. So we are breaking the downtrend in Zoom. That is a technical breakout on the daily chart. This bigger trend, I'm going to remove it. So you see it was in a downtrend. This is a bull flag coming from the lows. It's kind of a bull flag. It's a flag pattern. It's a descending wedge, descending pattern starting to break out now. And we do have ARK. We do have ARK strength. So that is helping this index, right? This is like the mini tech, and ARK is helping this breakout. Now, the other one is if we pull it from here, the trend from here, we're not there yet, right? So we're still, this is why I had this. We're still not out of this one, but we're in the breakout zone from what I can see. If I go back to the 4-hour chart, right? Same thing, 4-hour chart. We are breaking out of that little flag. This is a bull flag because we're coming from the low. So this is a bull flag. We're breaking out of that bull flag. But if we do pull from this previous high, then I would say we still have a little more room to go. We really need to clear 7150. We need to clear 7150. But in the short term, that's a little signal right there. You could, if let's say I had 4 contracts and I wasn't in yet, probably scale in 1 or 2 contracts. Just FYI, not financial advice, but I just wanted to show that those technicals before we get back to the analysis. I have 2 first names, Ricky and Bobby. That's what's up. Earlier than you, I bought shares. Yeah. I remember when Isan, I remember when you got those Zoom shares. I was like, dang it, man, he got in before me. But yeah, now that ARK's moving up, I have a lot more confidence. Let me see. Now the ARK is starting to break. Let's see what does ARK look like. ARKK. Yeah, our ARK is clearly breaking out. I mean, that's a clear breakout right there. So that's a clear breakout. Yeah, ARK filling the gap at 47.55, 53. So yeah, ARK is breaking out, man. This is game time. This is game time. Hopefully it holds. Maybe it doesn't, but ARK is starting to break out. All right, back to the program, back to the CNBC program, Chrome tab.
Capital markets, businesses, improve over time?
Well, I think over time they will.
Let's
I'm not
go,
sure
big
they'll
man.
improve between now and the election at the end of 2024. I don't think there's any energy in the Democratic Party for all of a sudden Biden's administration to start like loosening up.
No, of course not.
Like,
I'm not suggesting that that would happen in any way. I'm just saying, if this is an indication at least that you can still get a deal through, if the deal has merit and if it's not as anti-competitive as the FTC would otherwise have you believe or take the position on, then maybe not every deal is dead.
Okay, that could be. I don't think M&A is going to play a very big factor. If it does, that would be a cherry on top. I think the bigger picture is that despite the fact that we're sitting here at 5.5% rates on short-term treasuries, and this whole notion that it was going to be a substantial challenge to people's appetite for stocks, that actually has not materialized.
Especially longer duration stocks.
Yeah, that's right. So that actually has not materialized. And demand for stocks is really what matters. We can all analyze the economy. We can look at the fact that the surprise index is the best that we've seen going back to Q3 2020, meaning all of the economic data is surprising to the upside at a very surprising rate. We could continue to look at that stuff, but what this really all boils down to is, do people want to buy stocks or sell them? And so I always talk about technicals on the show, but if you even look at some of the fundamental drivers of stock market ownership, Vanguard put out a report this week, How America Saves. They're looking at 401k balances for, I don't know, 100 million people, whatever the number is. People over the age of 55 hold 50% of their portfolios in stocks. 10 years ago, that was more like 35%. That's just a sea change in attitudes about risk and about exposure to the market. That's buying pressure that's coming into this market every 2 weeks when people get their paycheck. What will all of a sudden curtail that? I don't know. You have buyback support from companies, might not make a new record like we have in prior years because the cost of capital is higher. But again, it's another leg of the stool. It's still there. Now you're going to get the IPO market back. And I don't think you're going to get the 2021 silly IPO market back. I think you're going to get a more responsible underwriting calendar, but that leads to more animal spirits, to more enthusiasm for the overall picture. So I think with those things in place, you may not get the M&A piece back, Scott, but you almost don't need it. There's enough going on right now that's making people feel positive.
Can I talk a little bit just to touch on what Josh said about buying pressure and where that buying pressure is coming from? Because buying pressure, particularly in the top 10 technology names, if you will, isn't coming from the people on this desk who are active managers. Active managers from an institutional perspective are light in these names. They're all underweight. This positioning that Jim and stuff are talking about,
They're all
nobody's
underweight.
Overweight Apple, Microsoft, Amazon.
You can't.
You can't because it's too big. Hedge funds, same thing. They're underweight as well. So Josh is right. For this to continue, this buying pressure has to come, at least for technology and probably for longer duration growth stocks, has to come elsewhere because it is really difficult to take a outsized position in the names that have driven performance this year.
Give us a sense of, as we mentioned, your new job. Congrats, Neuberger Berman, Private Wealth. Give us an idea, exactly what you're going to be doing and what your view is on this idea that, bonds versus stocks, what your current take on the competition between the two is. As some say, there's still too much. The risk reward isn't great for equities, and it's better in terms of bonds over stocks.
Yeah,
The floor is yours.
So I'm going to be sitting on the asset allocation committee of Neuberger Berman and really overseeing the investment platform and strategy for our private wealth business. And from our perspective at Neuberger Berman, one of the biggest challenges.
Oh my God. I don't want to hear you talk.
And just piles and piles of cash everywhere. Every corporation is very cautious coming.
I just want to hear him get straight to the point. I don't want to hear your whole story about this and that. Just get to your point, right?
Right. Why were they so?
Because the economic,
wrong, but I mean, that's what it is.
Because the economic data combined with higher rates historically has meant a situation where you would see that contraction eventually start to hit earnings much harder than what we've seen so far and hit the demand for stocks. The big difference in this cycle versus all previous cycles and why this was so hard this year, and I was very cautious coming into this year as well. If you listen to Greg Jensen from Bridgewater, for example, never before have you gone into a potential recession with the consumer, the household balance sheet in the shape that it was in, and just piles and piles of cash everywhere, every corporation, not just in America, but around the world, was able to refinance and refinance again. They locked in an extremely low cost of capital, and they pushed out their maturities simultaneously. That 2020 to 2022 period of window of time literally throws all of the old economic cycle information on its head. Consumers did the same thing. Look at what's going on with earnings this quarter. All of the drawdown in earnings expectations from March until now for this quarter is coming from the energy sector. All of it. The consumer discretionary sector is expected to report 27% earnings growth year over year. So the consumer is what's keeping us out of recession. And look at the employment data. Of course they are. Nobody is out of work. We're at 83.5% labor participation rate for prime age workers. That's people 25 to 54. That is a high that we haven't seen since the year 2000. So when nobody is out of work and everyone is employed and home prices are stabilizing and wealthy people are not just making money in stocks, but also in bonds and in cash, it's very hard to get the consumer to slow down. The consumer will not slow down. Talk to an airline CEO. And that's why, unlike in previous economic cycles with this much tightening of interest rates, we really haven't seen the effect yet. We will.
Well, that's the thing.
Just not yet.
But that's the point. Hold on. I'll throw it to you. This idea yet. Critical word.
Of course,
Everything
we all
revolves
agree.
around yet.
We all agree.
Which is why Marco Kolanovic at JP Morgan today says recession Q4 23, first quarter 24, buy government bonds, avoid stocks.
Just keep pushing it out until it happens.
Risk reward remains poor in equities in our view, he says.
Well, we're either going to slow down or we're going to go into a recession. And I think that there's a lot of stimulus still in the system that is providing these huge tailwinds, right? And that is why, I mean, the consumer, and even savings, I know it's being drawn down, but it's still quite high. And so you have the consumer, which is 70% of the economy. You have services that's doing quite well. That's 75% of consumption. So those two things right there just tell you, as long as wages stay strong, and by the way, real incomes are going higher because inflation is coming down. So real income is going up, and the job market is very tight.
So then would you take the other side wholly of that trade? That if he says
Look, the whole point is consumers are not holding up. They continue to spend. Wages are going up. Not in real time. We talked about this yesterday with Mike Italiano, which is that wage growth can stay sideways and still help the consumer because inflation comes down. So automatically, you know, your price of things goes down or stops going up. Your wages stay sticky. You can keep on spending while the inflation rate comes down for the market to go higher. There's just a lot of demand for stocks, and there's a lot of demand for stocks. And so people want to own them. They know the bear markets, you know, you buy in the bear market. So if you're taking the Warren Buffett approach, you're going to buy when people are fearful. And there's still people off sides, like we heard earlier. There's a lot of people who are just not buying stocks, a lot of fund managers, a lot of hedge funds who are underweight stocks and overweight cash, which eventually they're going to have to put that cash to work. So where do they put it in, right? Where do they put that cash in work? So I'm going to end the stream, but I'm going to leave you with this. Let's go over to the stock chart because I think we're going to see animal spirits happen tomorrow. I think we're going to see these animal spirits begin at least tomorrow. We got S&P 500 on the right-hand side here of the chart, and this is going to be key for you to keep your eye on, right? Taking out the pre-market. This is the S&P 500. We've been climbing, right? We've been climbing for a while. We've been bullish the whole time. This whole grind higher. We're bullish. Now we have another setup here. Okay, look at the setup. This is the, I guess you could call this a previous low, but we are basically in this bull trend, right? We're in a bull trend still. And I didn't think it was going to get this vertical, but it is. And it looks like the setup is an ascending triangle, which is a type of wedge, but it's not really a wedge. It's an ascending triangle. You just keep climbing higher. You keep knocking on the 4,400 level. Eventually you break out above the 4,400 level. In the short term, if we zoom in, we're really starting to wedge here. Okay, look at this wedge. Boom. Wedge there. And then we take that previous low. Come on, bro. Take that previous low and we're in a wedge. So the wedge represents the battle between buying and selling pressure. Inflation tomorrow will be the deciding factor whether we break out of this wedge and retest the highs, or we break down and retest the wedge. I mean, I'm sorry, the trend. Sounds kind of obvious, but just keep your mind on a swivel. Keep your head on a swivel, because then if inflation does come in at 2.9% or even 3 flat, I think the narrative really gets crushed, that I think people are going to have to switch, and they know it. So keep your mind on that. Other than that, again, like I say, can you check QQQ? Oh, yeah, we can check out QQQ for sure. Any other questions? Any other questions? So QQQ, let's take off all this stuff. I have a lot of stuff marked up. Let's cancel. Let's clear the draw set. Clear draw set. Let's make it clear. Sometimes you just got too much marked up on there. So Qs. Qs pretty much have the same thing. You could draw that, or you could take this. Right? You could take that. Qs still vertical. Actually, I would say Qs have been consolidating enough to make another move higher pretty soon. Wave 2 FOMO. So the Qs are in this sort of wedge channel here. And if we go in closer, they're also in not so much as, I wouldn't say the Qs are in a wedge in the short term, more of a descending channel. See? More of that descending channel. So we're up, down, up, down, up, down, up, down. We'll see what happens tomorrow morning. Should be very interesting. So yeah, a lot of channels drawn there, but basically we're starting to get tight, right? We're starting to tighten up, and that pressure is going to have to relieve somewhere or the other. If inflation comes down far enough, those people in cash are going to capitulate. They're going to have to capitulate. Markets are going to go higher. The bears are going to get hurt. They're going to have to wave 2 FOMO, because they're going to have to keep covering. People are going to get excited. They're going to have to keep buying. Breakout traders come in. I'm not saying tomorrow's the day, but tomorrow's the start of it, because we get inflation, and then you get inflation again on Thursday, and then you get earnings season start to kick off, and we're going to see what's really happening. This is where the macro comes in. This is where the data, where the opinions, we put them to the test. This is where we put the opinions to the test. Who's right? Right? Not who's right, but who was right. Who is tracking this correctly? And where exactly do we land? I think those are the two indexes. IWM, just moving in a range. IWM gets above that 189, 190 level. Looks pretty clear from there. So yeah, that's what we got lined up. I think that's all we got lined up there. So yeah, join us tomorrow, 10 a.m. Hold on, let me set up this. Try to set this up so it seems legit on YouTube algorithm. Yeah, so that's the setup right there. We're looking at the IWM. Let's go over to SPY. Think out. We had climb, and on top of that, we kept knocking at this level. This is really bullish when you get a breakout on an ascending channel. Usually those are bearish, but we broke out above that. Oh, excuse me. So inflation report tomorrow morning, 8:30 a.m., 30 minutes before the market. I'll be on here, and we will go over the inflation report. We'll dissect the CPI, core CPI, headline CPI, month over month, year over year, see if it matches up with the thesis. And if there's anything else, we will check that out. Other than that, appreciate you guys jumping on the live. Wouldn't be here without you. Love you guys. Have a blessed afternoon. Have a blessed day. Make sure you guys get your workout in, whether it's just a walk, some cardio, whether it's lifting weights. Get your workout in, get your rest, eat well, improve every day. Stay blessed. Catch you tomorrow morning. Appreciate you guys again for the support.